We welcome to us panel discussion on Safari Decree and its Supreme Court judgment. We heartily welcome today's speakers, CA Jatin Christopher, CA Sanjay Dhariwal, and ASHWIN KUMAAR to occupy dais. I request all to please rise for our CA motto song.
Yaeshasupteshu jagrati Yaeshasupteshu jagrati
Please be seated. Woof video will be played.
Arthashastram, Dharmashastram cha mean economic principles, earth, and ethical considerations, dharma, which are central to the work of accountants. The entire world is deliberating about impact of climate change coupled with disruptions of artificial intelligence. India has given philosophy of Vasudhaiva Kutumbakam to the world and successfully hosted G20 summit on this theme and also launched Global Biofuels Alliance. The accounting profession also has an enormous responsibility to guide the work where accountability meets innovation so that vision can be converted into solution. The Institute of Chartered Accountants of India, being the world's largest accounting body after the successful hosting of WCOA 2022 and GLOBAC, proudly presents before the World Forum of Accountants 2025. Where accountability meets innovation for a sustainable planet. The world's brightest minds will exchange insights, explore emerging trends, and unlock the possibilities for the profession. Where foundation will be laid to shape the vision for the future of accounting profession. Hosted at Yashobhumi, the largest convention and exhibition center in the heart of India's capital, New Delhi. Inaugurated by the Honorable Prime Minister Shri Narendra Modi, is all set to host the congregation of accountants from around the world. And while you're here, experience the vibrant culture and heritage of New Delhi, a city where history meets modernity, offering unforgettable memories.
World Forum of Accountants, an experience of 3 days. Insightful discussion, groundbreaking innovations, and unparalleled networking opportunities.
With immense pride, we invite you to WOFA 2025, taking place, happening from January 31st to February 2nd, 2025, at the magnificent Yashobhumi, New Delhi. Experience 3 days of insightful discussions, groundbreaking innovations, and unparalleled networking opportunities. World Forum of Accountants 2025 is where you need to be, where accountability meets innovation, AI for a sustainable planet. Join us at WOFA 2025 from January 31st to February 2nd, 2025 at Yashobhoomi, New Delhi. For more details, visit wofa.icai.org.
It's my pleasure to introduce Sanjay Dhariwal sir, who is a moderator of the today's panel discussion. He is a senior partner in DNS, a past national president of Therapeutic Profession Forum and past secretary director of GITO Apex, vice president of SRN Hadash College, author 28 plus books on indirect taxes, advisor to government on GST pre-implementation, 1200 plus paper presented on VAT, GST, sales tax and many more topics, addressed 300 plus seminars on direct tax, career counseling, spirituality, etc. So known for maintaining excellent relationship in professional and social office. Thank you, sir. I request Saravanan C. Saravanan sir to present shawl and memento to our introduce CA Jatin Christopher, who is a panelist of today panel discussion. He is a chartered accountant, cost accountant law graduate and specialized in the indirect tax laws. He is published author and a resource person for the Institute of Chartered Accountants of India in his various post-qualification program on indirect taxation and extends support to ICAI in the publication of education and research material on various indirect tax topics. He is also a research person for the government in conducting training for practitioners, tax, trade and officers. He has been in practice since 2000 as a partner in JCSS, a full service firm with presence across India. Thank you, sir, for today's panel discussion. I request CA Rajnikant sir to present short memento to our speaker. It's my pleasure to introduce CA ASHWIN Kumar sir. He's delivered 200 plus lecture in GST in last 3 years, invited as paper writer and a group leader at Confederation of GST Profession of India RRC program, contributed article in various professional forum, faculty for GST crash course at ICAI Singapore branch, faculty for GST at various professional institute, end-to-end GST compliance and support for PSU having turnover more than 2,500 crores. So business restructuring and GST impact on he's done and the drafting of replies to SCN appeals and representation before various authorities, liaison support for department audit under section 65, a customer's opinion for solving complex indirect tax problem. Thank you, sir. I request Pradeep ma'am to present short memento to the speaker. Hand over to the speaker.
Tax is concerned in the country, and I've also got a very young and dynamic youngster called ASHWIN on my left hand side. Both of them are going to give us a very beautiful view on the discussion on a topic called Safari Retreat case. I'm sure many of you would have heard this case many times, and heard many speakers. You have been on the YouTubes also, you have been seeing them across. So today we thought that we will try to give it a little different angle. From the probably where many of the speakers would have not spoken on those angles, we'll try to speak on these angles also, so that we get a little more insight. I do not know whether we'll give you the answers of what is the legal position of the law or what is going to be the legal position of law. We are just trying to get you the position what we believe is as per the law. So there would be a diversion, because this is just, I would say that it is the beginning of litigations as far as this subject is concerned. And we have to keep our fingers crossed to say that how exactly the law would evolve, whether there would be amendments to the law again which is going to happen, whether you're going to have a retrospective amendments which is going to come across. These are all also going to be the challenges, and if these challenges have to happen, how do we advise our clients accordingly is the area which we have to look into it. Basically, I have quit indirect tax practice since last 5 years, and you would be surprised that I'm still come here, but not as a speaker but only as a moderator. So my job is to only ask questions, and the answers can be expected only by both the learned speakers here. So if any of the audience also have questions, I think you can, since we have a very small gathering, you could also stop on any point which we are discussing, raise your hands, stand up with the permission of the chair. You could also raise the questions and ask, so that we don't have to write down the questions into it if both the speakers are okay with it. Okay, so that we have more of discussions, and whatever we discuss, it has to be a value add. Is it fine? If audience have any questions on that particular point also, you could ask it across, you could speak it out across, so that we would also go back to Bangalore and be enriched with the knowledge of what you all have, and it is not just going to be a one-way traffic. And I do hope that you would not disappoint us, because each chartered accountant is a super specialist in his own way, and we would like you to also come out with your knowledge base. So, if you go to see the whole concept of works contract, or talk about the immovable taxes, or about developers and builders and etc., we have had this issues way back from the 46th Constitutional Amendment. From those days, we had the sales tax legislature. From the sales tax legislature, we moved into VAT. Till sales tax came, we were more or less clear with the positions of the law. When VAT came in, again, it disrupted the position of the law. When VAT came in, again, we were more or less reaching the level where litigations were reduced substantially. And then all of a sudden, we saw that the GST law came in, and again, we have got a series of litigations as far as works contract is concerned. Since I have a very experienced personality here, and I have a youngster here of ASHWIN being basically from a very recent batch, just a 28-year-old gentleman, I will not ask him the question pertaining to the law which was pertaining to in 1980s and 90s. So I would request Jatin sir to take it up over there, but it doesn't bar Mr. ASHWIN to answer anything or to add on to his views also as far as it is concerned. Mr. Jatin, we had the 46th Constitutional Amendment. I'm just going by the preamble of this topic before we jump into this topic. So in the 46th Constitutional Amendment, we had deeming provisions under the sales tax legislature in case of leasing, in terms of consignment sales, and in terms of works contract, which was earlier not liable to tax. Those deeming provisions were also applicable based on the constitutional amendments for the VAT law. Then the same were amended, and today GST law is under a different article of the Constitution. Do you feel that there should have been a deeming provision under the Constitution for the GST law also, or no?
As far as works contract itself is concerned, the challenges in the sales tax era, the remedies that the government came out with through the constitutional amendment, and how it was continued in VAT, the subject matter of tax at that time was goods involved in the execution of a works contract. The subject matter of tax was not the works contract entirely, which is why in service tax law, the tax on the labor component involved in a works contract was separately subjected to tax. although there is a certain extent of overlap as to what is the valuation of goods in a works contract versus what is the valuation of services in the same works contract. But in GST, works contract is a service. The entire works contract is a service. So therefore, the deeming fiction that was necessary in the Constitution has substantially got whittled down because the fiction is flowing from second schedule. Second schedule in the GST law provides the legal fiction to treat the whole of the works contract as a service. So therefore, in the Constitution itself,
we can hear.
Okay. I will hold the mic closer, maybe that will help.
Yeah.
So, unlike the need for a legal fiction in the Constitution, there is, I feel, no need for such a constitutional fiction to be created for the purpose of GST, because the legislations there were different. The whole concept of a GST council approving a legislation and states implementing the decision taken in the council, that changes the circumstances to warrant such a fiction in the Constitution for the purpose of GST.
Mr. Jatin, as far as I remember, sale of goods or taxation on sale of goods was a right of the state government. Taxation of services was a right of the central government. So this was one area where the litigations was there. But this you're talking about post 1994 when the service tax law had come in. But prior to that, when we had the constitutional amendment, the issue was of the immovable property. Now, in case of Gannon Duncan's case or Builders India cases, etc., one point which was said was that when any movable property is embedded into an immovable property, at the time when it is embedded into the immovable property is the time when the transfer takes place. So, the concept under the sales tax legislature was on transfer of property. Today, the concept is on supply of goods and services. But when we talk about supply of goods and services, whether the goods would include immobile property, are we making a change in the stand to say that now under the GST law, even the goods would be immobile also, or it is still going to be only movable?
In GST, a small subset of transactions which were hitherto covered as works contract are only being taxed as a works contract. If you see the definition in 219, we find that there are 14 adjectives used to describe the activity, the resultant of which must be an immovable property. In the earlier tax regime, there was no requirement for an immovable property necessarily to be a works contract. Fabrication of a rolling shutter, we've seen in Vanguard rolling shutters, that also is a subject matter of works contract, because the tax was on the goods involved in a works contract. But in GST, if it is a rolling shutter today, it is not a works contract at all. It is goods or services depending on what is the principal supply, but only if it is an immovable property will it be a works contract in GST. So this marks a significant shift in the scope of works contract in GST compared to how it was in the past.
Mr. ASHWIN? Yes, sir.
Install the elevators.
Yes, sir.
Same principle apply?
No, it won't apply. I feel installation of an elevator, I feel, may not straight away, because as recently as 2019 when Pune elevators got decided, Supreme Court said we don't know what it is. Ultimately, Supreme Court said, Seriya Terilapa, whatever it is, that's how they said you have to decide it based on each fact. What is relevant is, does the elevator supply the identity of the immovable property? We can go into some examples to understand this, because at the time of securing plan sanction, how many elevators are statutorily required to be installed in a building. Let us say in a high-rise building, the fire permission says you must have 2 lifts. But for benefit of all the passengers who use various floors of the building, they may decide to install 7 lifts. The 2 lifts which are essential for the identity of the building form an integral part of the building. But the other 5 that are installed, that is not necessary for the identity of the building. So therefore, in works contract in GST, we have to work backwards. Because in central excise what used to happen was, the argument during installation of a plant was that it is immovable property. Right from Quality Steel Tubes, Mittal Engineering, Hyderabad Race Club, all the way up to Triveni Engineering. Sirpur Paper Mills was an outlier. Finally they said, when you install a plant, it is an immovable property, therefore there is no central excise duty. Today, that same argument is affecting us. If you say it is an immovable property, you won't get any ITC. So today we are arguing that it is not an immovable property, so what if it is affixed to the... So therefore, the extra 5 elevators that are installed have stand on a different footing compared to the 2 original approved installations of elevators.
Only we can get 2 views.
You can definitely, because that there were 2 advance rulings, one from Karnataka, where they have not appreciated what is essential to establish that building versus what is non-essential. Stand has been taken across the board because these are all high value. If you see, service elevator is required. One more passenger elevator is required. But if you have some elevators which will service only the hotel, some elevators are servicing only the residences, some go directly to the suite rooms on top. So therefore, what is essential alone will form part of the building. The others, you don't have to be compelled to give it the same treatment.
So ITC also we can play.
Yes.
We'll come to that a little later. After we touch the Safari case, we'll come to it, sir. Mr. Ashwin, would you like to add on something on the constitutional amendments, whether required, not required?
Sir, before I embark some serious discussion, let me loosen up a bit. I would beg to take 1 minute of Manan's time to say this is an ineffable privilege to co-panel alongside legendary CA Jatin Christopher. I feel like it's a debut along with Sachin Tendulkar. Although I'm not a hero, I feel it's definitely going to be an unforgettable experience. Yes, I was spellbound by his deliberation, what he told. I have few points here on whether the works contract it's an indivisible contract. What is sought to be taxed under GST law is a goods or service. When a works contract has the composite character of goods or service, where will I try to fit it? Although the supply comes secondary, before that we have to decide whether it's a goods or service. So whether a works contract, is it a service? It has an indivisible element. So therefore, since I'm unable to classify, or it becomes a separate species by itself, can it be brought under the levy of section 9 is what a thought to ponder. Yes, this is what I would like to do.
So according to you, the constitutional amendments are not required. You stand with Jatin sir on this issue?
Yes, sir.
Okay. Even after knowing the fact that in Gannon Duncan's case, because if you see the definition of the goods and service tax law, it talks about goods and services. Services can be defined, dealing provisions are there. Goods are very clearly something which is not immovable. So, if it is immovable, whether it would be part of goods and services, or it would be only services, or it would be outside the boundary of goods and services.
I'll give us some examples to share my thoughts. Whether the subject matter is movable or immovable is less relevant than the nature of the transaction involving the subject matter. For example, a building is an immovable property, But when the building is given on lease, it becomes a service. The building is immovable, but the transaction qua the building is to permit the user of that building only. So therefore that aspect of the building has to be examined, which is the subject matter of supply and not the object itself. Second, when we talk about property, we are referring to the thing. That is very wrong. The thing is not the property, the building is not the property, the land is not the property. The rights vis-a-vis the thing is called property. The tenant has possession of the premises. The owner has title to the premises. The tenant comes into possession under a lease agreement. So therefore we have to differentiate the thing versus the rights vis-a-vis the things to appreciate what is immovable property. Third I expect to mention is tangible property we cannot understand, touch and feel what is tangible property. Immovable property very often we assume is tangible. Land is tangible, building is tangible. Can we imagine an intangible immovable property? An intangible immovable property. The right to use the building is an intangible immovable property. It is an immovable property, but you cannot touch and feel that right to enjoy it. The right to develop a land, ownership of land is different. Detached from the ownership, the right to develop it is an intangible immovable property right. A tree full of fruits, it is not immovable property because the fruits are fit for harvesting. A tree full of fruits in Marshall versus Green was held to be a warehouse of fruits. What is a better way to store fruits than leave it on the tree when it is time for harvesting? Now we take a contract involving harvesting. If you enter into a contract, let us say somebody has a piece of land with a lot of fruit bearing trees, somebody pays 5 lakhs of rupees to harvest all the fruit. It is a contract for sale of goods because the goods are present goods. But if he says I will pay you 15 lakhs for 3 years harvest, for 1 year it is supply of goods, for 2 other years it's a supply of service because the fruits don't yet exist. A promise in present to contract in future is not a contract in present, it is only a promise. But if you enter into an agreement to transfer 2 future years harvest, you don't know the quantum. So today itself if you are entering into an enforceable contract, it is not the fruits that you are transferring, but the rights to those fruits that are to come in the future. So therefore we have to differentiate property vis-a-vis the rights to property. It is not the thing, it is the rights vis-a-vis the things. Now if you take this understanding and look at immovable property, what is being taxed? In GST, there is no tax on immovable property simpliciter. There is no tax on immovable property whenever there is an absolute transfer of title that is taken care by para 5 to schedule 3. But it is the inferior rights to an absolute title which becomes subject matter of a transaction that is exposed to tax. Whenever inferior rights to an immovable property are the subject matter of a transaction, it will be always taxed as a service. It will never be taxed as goods, because of the language of the definition of goods. Last point on this is, the definition of goods itself includes goods attached to and forming part of the earth. Goods attached to and forming part of the earth is itself part of the definition of goods in 252, but there is a rider, provided it is agreed to be severed. If there is an agreement that it will be severed, even though it is not yet severed, it is treated as goods and taxed accordingly in GST. So therefore, if we differentiate these 4 elements, I suppose it will help us unwrap what is going to happen as far as immovable property taxation is concerned.
Thank you, Jatin. Thank you, Jatin. The next question, which now we come back to the subject proper today. I would like Mr. ASHWIN to tell us that this case law the Supreme Court judgment of Safari's case, whether it is a judgment which gives a decision or whether it is a law which is still in the initial stages, and what would you read as far as the judgment is concerned. I'm not talking about what was the judgment, I'm only talking about is it a judgment which can be considered basically as a law today, or is it just that the courts have said that let's get back to the basics?
Sir, as far as understanding of this judgment is concerned, I would bifurcate. There are two substantial areas which I discussed. One is on what is written in the law. Certain phrases of law has been clarified, and certain phrases of law it is yet to be decided. That is what I would like to conclude. And the courts have taken one novel approach, which they call it as test of functionality or test of essentiality. To be more precise, when it comes to the expression on its own account, I would say this judgment has laid its path clear. But when it comes to what is a plant or machinery, the court has resorted to take the recourse of test of functionality or test of essentiality. But as far as my little research, whatever I have done is concerned, the courts have been woefully inconsistent in terms of deciding how to say whether an X property is a plant, how to classify a monkey, a donkey, a turkey. So we are not in a position to exactly conclude because there is no standardization in the test that has been laid out.
In this judgment?
Yes, there are two aspects. That is one, on its own account has been clarified. What is plant or machinery to be decided? The court has resorted to test of functionality and essentiality. But the courts have been, when you compare the previous trends, in my humble view, the courts have been inconsistent in deliberating on this aspect.
Mr. Jatin, your viewpoint?
This judgment does nothing new to the body of knowledge that we already had. Sad to say, with utmost respect, nothing new comes out of this judgment for two reasons. One, High Court in para 19 very categorically said construction of a building with an intention to let it out is one continuous transaction, so therefore input credit is admissible. Whether right, wrong, it's a matter of examination later. High Court laid out something. Supreme Court decided to steer clear of any controversy. They laid for themselves three questions. In para 24, they identified three questions. Those three questions were never part of the original question. They came out with three questions, gave an answer to two of the three questions in para 67 and concluded saying, very interesting, in para 6 the judgment says brevity is the hallmark of good advocacy, and 91 pages of something is going on in this judgment. Finally they come to conclusion by summarizing various judgments. In para 25, if you will see, it gives great jurisprudence it attempts to lay down. It is basically summary of hitherto existing wisdom, no new wisdom in para 25. Using that established jurisprudence, they come to the conclusion saying, here I will appreciate the court. It is not possible to lay down one size fits all answer in respect of input credit for immovable property. The wisdom is to steer clear of controversy. So the question is to identify. Someone said, knowledge is to know what to say, wisdom is to know when to say. So here very clearly the court said, in each case it has to be examined whether this building, what looks like a building, is it a plant in itself or not, has to be examined. So therefore they stayed away from controversy. They laid down one essential aspect which was never in doubt, was whether these two provisions, clause C and clause D, whether they are constitutionally valid or not. That part they lay down saying it is constitutionally valid. But the implication is that with Supreme Court having declared these two provisions as constitutionally valid, now they are kept beyond the reach of any High Court. If anybody wants to assail these two clauses, they can't go before any High Court. So therefore, these two clauses have now become beyond the reach of any taxpayer. So this is something that we have to be mindful when we are examining these two clauses.
One thing what we understand from this particular thing is that if there is a law, the intention of the law is very clear. Though the intention of the act may be contradicting the law, but if the law is very clear, can a High Court read down that particular section, or can the judiciary read down that particular section, was one which was decided in this case. Ashwin, would you like to put on something into this?
Yes. So there is something called Doctrine of reading down. See, one classic judgment which I would like to draw the attention is DTC versus Congress Mazdoor, 1990 judgment. Para 255 of the judgment speaks on when a law can be read down and when a law cannot be read down. It lays down two principles. When there are two interpretations possible, one is constitutionally valid, another one is not constitutionally valid, the former will be preferred over the latter. And second thing, the second principle which I would like to highlight is, when the law is written in unambiguous term, there is no vagueness, and intention of the law is clearly demonstrated. For example, when we go through this judgment, the basis for denying the credit is, one of the reasons put forth by the revenue is creation of immovable property constitutes an intelligible differential. So when the law is clear, when the intention is to deny the credit, because when you are going to construct a property and sell the property, then in such case you are not going to pay anything on your output. Then why should I allow you the credit? So when the intention is clear, in such cases reading down cannot be resorted. So that is probably the reason why I find the Supreme Court has ignored what the Orissa High Court has done.
Do you agree with do you agree with Ashwin to say that the Supreme Court has denied what the Orissa High Court has done, or the Supreme Court was quite correct in saying that the judiciary should not step into the lawmaker's role?
I think so. I agree with you. Court has not blessed the findings of the High Court on the principle of law. They have relegated the matter back to High Court in para 56 to say, now you examine whether this mall is a plant or not, after having laid down only the interpretation that these provisions are constitutionally valid. And with you on this, that they have not.
No, principally what we have to understand is, before going into the definition of plant or no, what the Odisha High Court said is that the intent of the legislature was that if there is a continuous service, there is a liability to an output tax, then your input tax should also be allowed even on the constructions, etc., and given across. That is what was the intent. And though there was a restriction under section 17, they said that it is not the intent of the legislature, so it should be read down. The Supreme Court said you can't read it down, if I'm not wrong.
You're right, you're right.
So basically, one important aspect that we have to understand is, not only for the GST legislature but for any other legislature also, that Supreme Court has put a break across to say that even if the intent of the legislature was different, but if the law is drafted very clearly and precisely to say that this is what we allow, this is what we disallow, then the judiciary cannot step into the shoes of the lawmaker to say that you can basically read it down. I think this was a very, very important aspect which the judiciary came out, or the Supreme Court came out, which is highly appreciable. Now with this, there would be a lot of writ petitions and litigations which will also be closing down, because now you will not be able to go to any other place other than the Supreme Court to say that, now please try to see that this is the intent. As Ashwin rightly put it across, that if it is constitutionally hitting you somewhere, then they have the right to read it down, because the Constitution is the supreme authority and no law can override the Constitution. So to that extent he is right. But as far as the Orissa High Court has done across in this case was, it did not say that it is constitutionally invalid, it only said that the intent of the legislature was to give the input credits in a continuous process. So this is the place where we have actually been saying, so we'll have to read this case before going into the case law. This is something that we have to highlight it and do it across. Any inputs anybody would like to add on this?
I would like to.
Please.
This rule of reading down, as you rightly mentioned, it is done to iron out the creases in the law. If the law is ambiguous, or the courts cannot remake the law, as what you rightly pointed out. The courts cannot remake the law. It can only find if something is, see, basically it's like, trying to save the provision, but at the same time creating an attack on the provision. What they try to do here is that they don't want to strike it down, but at the same time I will give you a relief to the taxpayer by what reading down, by subsidizing the accept of the provision is what the rule of reading down can be done. It can be done only when the law is ambiguous or it suffers from vagueness. Even the intention is clear such that it is going to cause an undesirable effect to the taxpayer. The courts cannot act in good conscience to remake the statute. That is what I would like to say.
From the audience, would you like to enrich this? I would also like to take some input tax and go from here. Yes, sir. Little louder if you don't mind. A mic can be given. I would appreciate if more of you join sir and also have an interaction, because that would add more value to all of us coming here. A divergent view is more appreciated. Just giving your consent that you agree with the speaker is not acceptable.
Sir, actually one small thing, that as a professional actually we are discussing the High Court, all those actually very huge.
I request you to keep the mic without shaking your hands.
Yeah. So, no, what actually sir, I was just stated actually, here the professional we are discussing, the Odisha High Court, all the Safari case, all those things we are discussing, not here, constitutional validity, all those things. Now, I just want to understand actually, from the Western panel, sitting in the one account department, one CA, we just passed 2-3 years and all those things, in the just think of what accounting treatment he will take so that his management also will appreciate, because co-management is, willing to take the professional fees in the letter, and it is a huge cost of ITC and all those things. Can you please
Mr. Jatin sir, I will put on this question to you. The basic question what I understood from sir is that as an accountant, when I account for my clients or my bosses or my employers, I have an issue whether it is allowed or disallowed. There's always a controversy on it. Odisha High Court said it is allowed. The Supreme Court said that you can't read it down. So as an accountant, should I claim the input tax credit whether it is disputable or no? If I claim an excess input tax credit, what could be the penalties which the government can levy saying that you have claimed excess credit which is not eligible? If I want to claim it, and if I don't claim it, I may lose the right of claiming it later. If I don't claim it, I lose it. If I claim it, I am a penalty consequences. How do I account it and also claim it and still don't get into the penalty clauses is something what Jatin sir should identify and tell us, so that we are safe also and we don't lose the benefit of claiming input tax in case it is eligible.
See, we are expecting tax law to be simple. There is no assurance that it is going to be simple, because we are at the periphery of where this law operates. If we are at the pith of where it operates, there may be no confusion for the accountant. All that I would encourage this accountant to do is to ask the management to get a guidance from some experts like Sanjay Dhariwal, and say what should the accounting treatment be in this time. The implications are very profound. For example, if he does not claim credit, disagreeing with the High Court, or in his own mind he applies the functionality test and says, I don't think this is a plant, and he does not take the credit. If tomorrow there were to be decisions that say such and such building will be a plant, then he is going to be pulled up. On the converse, if he decides not to take credit, if he decides to, let's say, take the credit, and tomorrow it is determined that he should not have taken the credit, how will he remove this out of it? Because when you capitalize it without input credit, you will proceed to claim depreciation. 2 years later you cannot treat the input credit that was claimed as an addition to the fixed asset. Will it not have a bearing in income tax? This addition by itself does not have an invoice. This addition does not itself have any transaction. It is just a change in the accounting treatment. If you look at Companies Act, we may have to go back and calculate depreciation retrospectively. Had this asset been capitalized with the GST, calculate the depreciation for those various years. To the extent of current year's depreciation will be a normal amortization. To the extent of the differential depreciation as an extraordinary item. We know these things, so therefore it is not a simple case for someone to say, please simplify everything for me, I want to take a decision without any ambiguity. May not be possible. So one has to take into consideration implications under allied laws also while making a decision.
Mr. Jatin, now supposing I don't claim the input tax credit, I claim the input tax credit and I don't show it as an asset value. After 2 years, I feel that no, that would be an area of litigation, I don't want to get into litigation, I reverse it. The moment I reverse it, can't I claim it as an expenditure totally and rather going for the depreciation on the same?
I'm not sure about making a very definitive statement on income tax treatment for this, but I sense that this much of input tax credit cannot be treated as a period cost because it may not satisfy the requirements of let's 28 to 44D to allow this as a credit. This is just a change of interpretation. Nothing happened in the relevant previous year to treat this as a period cost. It is some change of opinion that the taxpayer himself has reached, whether on his own or based on some external developments. I don't think this might be a straightforward case to treat it as a period cost.
ASHWIN, would you like to add on something to this?
Yes, sir.
Can we get the mic? Or you can pass on the mic over there. Sir, after he finishes, you can hold the mic with you.
So, treating it as a loss, so what precisely it implies the fact that instead of recapitalizing, or rather capitalizing, you want to expense it off the credit. That's precisely the question is pointed.
First, whether you would like to add something to what Jatin sir said, that there is an element of risk when you take it as a credit, and when you don't take it as a credit, if you lose it across. We had our own case in which one of our clients was going for a hotel in Bombay and for the married group. We had applied for an advance ruling and claimed the credits accordingly. But after 2 years, still the advance ruling didn't take up this matter. It's all because they were waiting for the Supreme Court judgment. My clients withdrew that advance ruling and reversed the credit.
But I have my views here. For example, if I'm going to avail and keep it in my credit ledger, you are not going to succumb with any cost. But however, the adjudicating authorities are they're ridiculous in terms of their approach. So they make sure that pardon my French, but certain facts are as hard as granite. It has to be digested. So my point is, they're ridiculous if you're going to keep the credit on the credit ledger and not going to utilize it. So I don't think, and also keeping it for a long time will not find any prudence when it from the business point of view. So I would say, take a position, make it clear what you're going to do. Either you're going to capitalize it, claim the depreciation benefit, or if you want to divulge into the path of litigation, be ready to bear the brunt and take the credit and take. That is what I would like to conclude here.
Sir, you would like to ask something? After that you will. Sir, after that you can give the mic over here. After he finishes.
Reversal of input tax rate also.
Little closer, sir.
Reversal of input tax rate, that's a debate. Should be done within the relevant quarter. If it's not done, they put a penalty in this regard. So what shall I do if I'm not reversed within the quarters? Say reverse in subsequent quarters, the year was levied the penalty. What shall I do?
Sir, 88D, Rule 88D says that as long as you have not utilized the credit,
Yes, sir.
And you are subsequently reversing it through 3B, there is no interest.
That should be done within the relevant
quarter. No, அப்படிலாம் ஒண்ணும் கிடையாது. இஷ்டத்துக்கு பண்ணிட்டு இருக்காங்க சார். They are doing their own Mylapur GST Act, Mandavali GST Act they are doing. They are not doing Tamil Nadu GST Act. You don't entertain such interpretation as long as they are saying the credit is
ineligible for tax credit.
No, it may be ineligible, it doesn't matter. As long as you have not utilized the credit that is ineligible and you are after a gap of time which can be multiple quarters, multiple years, if you reverse that credit without utilizing it, 88B very clearly says there is no interest.
What about penalty?
Now penalty and interest will trigger if the reversal is pursuant to a notice of demand.
Yes, sir.
So if a notice of demand is issued, then you are in trouble. But if you are on your own reversing the credit, don't be anxious, there is no interest liability.
Here the notice has been issued in this regard. Reversal done it after the...
இது முக்கியமான ஃபேக்ட், இது சொல்லலையே.
Yes, sir. Notice is received.
Notice வந்ததா?
Yes, yes, sir.
அப்போ மேடம்
Penalty can be...
Yes, of course. Everything. The only exclusion carved out in 88B is it should not be pursuant to a notice of demand.
After the receipt of notice, the SC has reversed the input tax credit.
Interest and penalty will attract depending on which section they have initiated this action under. And just to, since you are having follow-up questions on this, let me just add one point. Anybody who has taken safari credits, you know what is safari credits? Anyone who has taken safari credits in the first 3 years of GST, 1718 to 1920, you can never be issued a notice under 74. Why? Because the view that you have entertained, that credit is admissible, is also shared by a high court. Although it is now overturned, the view that you have entertained that credit is admissible is bona fide because it is even supported by a high court decision which later got overturned, let's say. So your view is not impossible. Therefore, someone cannot say this was evasion of tax to come under 74. There are a lot of people who have taken safari credits, utilized it also in the first 3 years, subsequently stopped availing that credit. Therefore, limitation is something that will come in the way of department demanding all safari credits.
Have you had it?
Sir.
Hello. Maybe very basic questions, sir. In my case,
we all are at the base level only.
Okay. In our case, it was a warehouse which was built. Okay, it was built and we took input. By the time that the safari judgment didn't come. Okay, so what we did, we waited and we didn't took the input. Suddenly the GST officials came and said you should not have this in your input credit, in your credit edges, so reverse it. So we reversed it. Okay. So now the thing is, okay, luckily it has to be sold as it is, so there is no damage regarding the input which we have claimed or which is unclaimed. So we calculated it. Before it could be sold, we calculated and it's all done neatly. Now the thing is, the next tranche of warehouse is getting constructed. Again, the same question what he asked, but here there is a subtle difference between what he asked. We are very clear that this is going to be a property which will be leased out. I feel that we can take the input credit and adjust it. Am I right?
Sir, yes sir, in my view, it can be done for two reasons. One, the Supreme Court has clarified in 17(5)(d) what is meant by on its own account. A property which is meant for personal use, or the property where you are going to house your business there. On those properties, credits are not allowed. Where the properties is being constructed and it is being leased out, the explicit language leasing is also there, so it is being leased out, then it does not fall within the scope of on its own account. So escape the route of 17(5)(d). But one more aspect is there. There are other facets which I would like to add.
Whether
warehouse is a plant or machinery is a question which has to be decided. There are some judgments held. Yes, there are some judgments which in the past jurisprudence, in context of income tax, that too for the purpose of claiming additional depreciation, only in limited context. Go down, it has been clarified as not a plant or machinery, it is normal building is what it has been clarified. Whereas a cold storage structure, if you take, where it has both the aspects of plant as well as machinery, because it is being ultimately you are going to lease out that property, or you are going to use it, not going to use it for your personal purpose. If that so be the case, the cold storage has been held as what? It serves the specialized technical requirement, and it satisfies the test of plant or machinery. To that aspect, it has to be decided whether a warehouse constitutes a plant or machinery. And coming to 17(5)(c), one more aspect. Since you are going to, let us say how you are going to do this model is also another question which has to be seen. You are going to construct the property such that entirely contracted to some other person, he is going to put the goods as well as the material, then high possibilities are there it can become a works contract service. Now when it is a works contract service for construction of immovable property, the credit might be hit under 17(5)(c), because the language of 17(5)(c) is very clear. It employs the expression plant and machinery, and the explanation below the 17, it excludes building. If warehouse is categorized as a building, then the service you receive is a works contract service. Then I have my own doubts how far this argument can be sustained.
I think we'll go to a direct question itself along with this, that the court has spoken about plant and machinery, and it's also said about plant or machinery. So, Mr. Jatin, I would request you to clarify what is plant and machinery, what is plant or machinery, and one question from my end, it's a very simple one, that if I give it out for leasing, the court said that if it is a plant, it is eligible for input tax credit, probably. But if I'm using it for my own use, which are for taxable goods, why shouldn't it be allowed as an input tax credit?
So there are two parts to this question. I'll come to your direct question also, sir. Simple question, sorry. Sangadamana question kettu mudistinga. Plant and machinery, plant or machinery, court said there is a deliberate difference in the choice of words by the legislature. What is plant and machinery cannot be equated with plant or machinery. In plain language, we are not, plant and machinery is one word. It is referring to one expression. Plant or machinery is disjointed. It can be a plant but not a machinery. It can be a machinery but not a plant. But the sad part is, Rajasthan, Pondicherry and Jammu Kashmir Act has plant and machinery in both places. Plant and machinery, plant or machinery, which was such a big point of debate in these 91 pages of judgment, is not at all a debate in Rajasthan, Pondicherry and Jammu Kashmir. Next, if you see para 16, ASG said there is a drafting mistake. Court said there is no mistake. You can't hide behind the drafting mistake. When the taxpayer advances various kinds of arguments, court can say this is just argument to see if it will work in court. But when the government itself says there is a mistake, it has to be taken very carefully. Government will not make false statements, that too on affidavit. Government said there is a drafting mistake and the court said we will not correct your drafting mistakes. Now if it really is a mistake, the proof is in Rajasthan, Pondicherry and J&K Act. Second, in the last 7 years, 7 times retrospective amendment has been made. One more time, if that is going to solve the problem, but it will not solve the problem for the following reasons. Let's read the relevant clauses that we are trying to examine. You see clause D. I will paraphrase and read. I will leave out the words in parenthesis first, then I will read the words within parenthesis also. Goods or services or both received by a taxable person for construction of an immovable property on his own account. Goods or services received by a taxable person for construction of an immovable property on his own account. So, if it is on own account, no credit on the goods or services received by a taxable person. Why I am a taxable person? Because I am doing renting of the building. For that reason I am a taxable person. It does not say registered person. I have to be registered to take credit, but they are referring to a taxable person. Second, if it is on own account, no credit. What is the opposite of own account? On others account. A contractor owns the WIP, but he does not own the finished building. Yes or no? Accountants can understand this very fast. Contractor owns the cement, he owns the steel, he owns the work in progress, but he does not own the building. The owner of a building does not own the cement, does not own the steel, but he owns the building. Now, goods or services for constructing the building on others account, I will get ITC. Opposite of others account, own account. Owner of a building is constructing on others account or own account. Second point. Clause 16D, para 16D, ASG makes a comment to say, from commencement of construction until letting out, it is not a continuous, unbroken chain of transactions. Now you please see, construction commences, lease agreement also entered into. Is it possible? Yes. Not possible. Until the building comes into existence, it is not possible to enter into lease agreement. In Sale of Goods Act it is decided. In Contract Law it is decided. In Transfer of Property Act is decided. I will give you references. Section 4.3 and 6.3 of Sale of Goods Act 1930. It says, a contract in present to sell a thing in future is not a contract in present. It is only a promise in present to contract in future. So today, when you enter into a lease agreement, when the building is still not come into existence, it is not a contract. It will become a contract only once the building comes into existence. So today it is only a promise. Now is it an unbroken chain of transaction? Answer is no. Second, 55(2) of Transfer of Property Act says, nemo dat quod non habet. He who does not have cannot give. If I don't already have title to the building, how can I make that building which is not yet in existence the subject matter of a lease agreement today? Not possible. Between signing lease agreement and occupancy certificate, many things can take place. The building may not get finished. The building may not turn out the way tenant wants it. The right to refuse, when will it end? The right to refuse will end when the appropriation is complete. When is the appropriation complete? After conveyance deed, not before conveyance deed. So building construction commences, construction progresses, occupancy certificate is granted by the regulatory authorities, title is vested in me. After this title is vested only can I offer that building on lease. Prior to conveyance, if I have entered into any agreement to lease, it is a promise only and not an agreement. Point number 2, I have a right to divert it to somebody else if a more lucrative deal emerges. Point number 3, in anticipation of this customer's requirements, if I go about the construction, there is no obligation that I should lease it to this customer only. If I construct a cinema theatre, I need not run it as a cinema theatre. If I construct it as a hotel, I can run it as a hospital. Rooms only are required. So therefore, please bear in mind, in para 16D, ASG said there is a dividing line. There is a dividing line where the construction ends, lease commences. Since construction ends, at that point you have to examine whether output tax is payable or not. Now going back to 17D with the words in parenthesis, goods or services or both received by a taxable person for construction of an immovable property other than a plant or machinery. So there are two exceptions to claim credit. In the normal course, no ITC allowed. But two exceptions are there. Exception 1, if that building is for other account, you will get credit. For a contractor, subcontractor. For somebody else's account, if you construct, you will get credit. Exception, carve out number 2, if that building itself is a plant. Which is a building that is a plant? Court examined 3 judgments. They said cinema theatre is not a plant. Sir, what can be more customized than a cinema theatre, sir? A cinema theatre, exhibition hall and projector room, it is unfit for any other use actually. Hotel, they said, hotel is also not a plant. So I'll offer you one test. The means of supply versus the place of supply. A very old judgment of Madras High Court that says a building is not the machine, where the manufacture takes place. The building is the place where manufacture takes place. Now you have to examine whether this building is the means of supply or is it the location where supply takes place. A tenant occupies the building not because he enjoys the walls. The walls create the space inside for him to enjoy it. So therefore, please consider 2 exceptions. Own account, no credit. Not plant or machinery, again no credit. The exceptions are, is it on other account, take credit. Is it itself a plant or machinery, take credit. And or anyway, government said it is a drafting error, they may tighten the drafting lapses. How many drafting lapses in GST you are aware of? Until now, how many drafting mistakes you have come across in GST? Such a humble government, whenever they come across a drafting mistake, they are happy to retrospectively correct it. Section 7(1)AA, 16(5), 16(6), check definitions, things have been amended in GST. So therefore, consider in your case, you are constructing a warehouse. After completion of construction, will you have a conveyance deed in your name, Khata certificate in your name, property tax assessment in your name? Without any of that, is it in a fit condition to let it out? What if at that time the local regulator does not give you permission, saying that you have deviated from the approved plan? Maybe you have extended into neighbor site by 4 feet. There could be many a slip between the cup and the lip. So till your title is perfected, you cannot offer it for lease. Although in preparation of that tenant becoming your tenant, you may have arranged your affairs, but you have not done it under an obligation, but only in an anticipation. It may actually come to pass. In 10th standard itself, some young boys decide to do CA. 10th standard itself, they decide, science subject they were sleeping in class. From 10th standard itself, they decide to CA and successfully become CA. Many people become Deputy Commissioner of Commercial Taxes. So therefore, please be very conscious as to when the transaction of construction ends, when the transaction of leasing commences.
Thank you, and Ashwin, I would like you to, in a short phase, what is your opinion on plant and machinery? We are running short of time. Actually, the time given to me was 11:30. So we go on this point and then we go on just another 10 minutes. I'll extend it across. Sir, I'll come back to you a little later.
When on perusing in the judgment, see, the term plant and machinery is quite clear in the legislation. When you refer to explanation to section 17, the definition of plant and machinery is settled. But what is a plant? What is a machinery? The courts have resorted to two tests. One is what? Test of functionality. Another one is test of essentiality. See, it is interesting to know the courts, the honorable, in the case of safari retreats, you might find around 4 or 5 judgments which have been deliberated upon. In case of Victoria Aqua Farm, it was held that the pond, which is used for the horticulture of prawns, was held as a plant. Whereas in case of Anand Theatres, which was relied upon, it was held that the buildings, the theatres, and the hotels which are, and even there are several citations in it, where the hospitals treated for, specially meant for treating the infectious patients, is also not considered a plant. A hotel is also not considered a plant. Whereas a dam, which is constructed for manufacturing the hydraulic power, is considered a plant. So I often see, what is the basis for arriving at this judgment? Is there any standard test that has been laid down? And there is an overlap between often I see, there is in some cases, the expression of plant is often stretched. In some cases, the expression of plant is narrowed down. So what my takeaway when it comes to this expression as what has been, I understand, or I personally opine on this judgment, is it's on referring to various high court decisions as well, not just the safari retreats. The outcome is akin to that of a roll of a dice, where it dents the hope on the taxpayer to decide what is exactly the plant or what is exactly the machinery. And the second thing to state here is, that is what, as I already told, the courts have been woefully inconsistent in deriving at what is the exact meaning of the term plant or meaning of the term machinery. So, in each facts and circumstance of the case, they decide according to the facts. That is what I would like to conclude.
Sir, a quick question. The gentleman in the front first, sir. He's got the mic. Yeah.
I have 2 questions.
Just one, sir, then we'll take the back one. Which is important, you could give the priority.
Okay. One of my clients, he has just completed the mall construction under the JDA in Bangalore. Landlord is my client. He has entered into a development with the developer by way of a JDA. It has been completed in October. They have had a soft launch of the mall. Now, department has raised a notice for 100 crores on the developer to pay GST on the construction activity. The entire construction has been done by the developer, and it has been, completion certificate has been obtained. Now, the question arises whether the landlord, now 21 crores, the JDA portion of the 33% belongs to landlord, has been charged by the developer on the landlord to pay GST, to claim reimbursement for the their portion for about 21 crores. Is that 21 crores can be the landlord claim as an input credit?
Okay, basically what happens is X has the land, Y is the developer. The developer basically develops it for the landlord. Say they have a ratio of 33 to 67%. So 1:2 is the ratio. Now on the 1/3 portion, the landlord is also charged to tax. The question comes over here is that whether it is charged or no, we are not going into that. As far as he is concerned, whether that 33% what is charged across, can he claim it as an input tax credit for the same? And the second thing is that as far as the developer is concerned, whether he is liable to pay only on the 33% or on the 67% also he can claim the input credit.
Sir, the short answer to the question is, landowner cannot claim input tax credit. I want to give the answer straight. Now the question is, the developer, when he is doing the construction work, he is liable to pay tax on the construction service. Whether he is entitled to recover this 21 crores from the landowner is a matter of your contract, not law.
contract only, because there is a demarcation is available and the 33% of the rental is going to be charged separately.
All this future, in the joint development agreement, has the landowner agreed to reimburse the GST payable by the developer?
Yes.
Now you have to examine the developer has claimed input tax credit on construction cost.
No, it's DDA to pay.
No, sir.
Just now it has.
So now the question is getting extended. On the construction cost, developer has claimed input tax credit, which he can offset with the tax that he is now going to recover from the landowner. So there is a costing to be done to examine whether after setting off there is still something remaining to be recovered or the entire set off is sufficient. The part that Sanjay mentioned is the developer is entitled only to credit to the extent he is providing construction service to the landowner and not to the extent he constructed and retained on his own account.
We will not go for the extension of this question because this is not exactly dealing with the Safari case. So we'll restrict this question. Sir, last question of yours and then I have a few questions to close. You can use the mic, sir.
Yeah, it's on.
Sir, namaskar to one and all. My understanding on this, yesterday I saw a rubber plantation which was milked out, latex, milked out every 15 years by some specialists. They go there, milk out and sell it. So the question of time, that is whether it should be carried forward, etc., over a period of 15 years, something that depends upon the quiet case. You can write to the adjudicating authority saying the reason why you are carrying forward. That is the other one question. No?
Sir, I would restrict it only to the topic given to me today.
Yes, sir, no problem, sir.
You could take it offline if the speakers are okay when you have the tea break, which is another 5 minutes due.
Okay, sir.
Anything to do with Safari case only?
Yeah, this bond.
Yes, sir.
Issue. Yeah, in that GST, he is telling about the thing, overallly what is the total cost and what is the cumulative ITC you can credit, what is the cumulative GST, including the his own portion, total rework, GST rework, that is the 100%, 1/3 will be the thing which he has to reconsider. As the SIRC said, it should be costed properly.
Sir, with regard to the landowner share which the builder develops and does it, he has to basically claim to that extent he'll be eligible, but that is not to do with the Safari case. That is to be done with the works contract itself. Sir, one last question here, sir has to ask, and then please, I'm sorry about it, but this was also again the same issue which is taken it up and told across, and again this is not related to Safari's case. I'm sorry about it, sir. Yes, sir. Sir, mic a little closer, please.
So as far as this judgment is concerned, so we have to, the opinion of the auditor while finalizing the accounts is important. Whether it has been elaborated, I have not gone through the judgment. That is one. Number two, as far as the immovable property is concerned, the charge, the taxation is based on the stamp duty and registration charges. So this decision will be overturned with reference to immovable property. That is my opinion, number one. Number two, he elaborated on the what is plant and what is plant or machine or plant and machinery. So I don't know how many people have gone through the investment allowance what we claimed on olden days. So this interior is allowed as a plant in a cinema theatre or wherever it may be. So any resort and other things, immovable property is separated from the plant. So then the input credit is allowable, it is correct. That should be the final thinking that is coming to my mind. And since the registration part lies in the immovable property, the state government's right, GST cannot come into the picture at all, is my opinion.
Sir's opinion is accepted that as far as immovable is concerned, it comes into the state list, so the state's right is that. But what we are talking is about not about the immovable property specific per se, but we are talking about the services involved in the immovable property is what we have been discussing in this particular case law. Right, Jatin sir?
Sorry to intervene. So the input they will get accumulated over a period of 2 to 3 years. Only on the 4th, 5th year when it is coming into the life we will be claiming. So most likely the government will come with the legislation of in such situation where the added value is for towards the earning of the service for traffic, it is allowable, but it is within 3 years or 2 years. Otherwise also it is not maintainable according to me.
Sir, one thing we'll consider, what might be the amendment in the future is we may have to wait and see, but as the law stands today, we cannot take decisions from income tax and apply it automatically to GST because there are many business expenditure that is allowed in income tax that is credit is specifically blocked in GST. So GST is attempting to deviate from the jurisprudence of income tax. So my concern is if we use investment allowance decisions, if we use section 32 of Income Tax Act, those provisions to see how we will cross-pollinate that jurisprudence with GST, we may get into trouble. We have to identify plant and machinery on standalone basis as far as GST is concerned to be really sure we fit within the exclusion because there is a definition of plant and machinery given in GST law. So given that they don't want to follow income tax jurisprudence is evident here. Now if we bring that baggage, I think we may do disservice to our own exercise of interpreting.
Sir, as far as I remember, as far as the principles of interpretation of allied laws are concerned or similar laws are concerned, income tax would be a very different legislature compared to the indirect tax laws. So this we would basically may not be, you cannot blindly rely on it. We'll have to see that sufficient grounds for us to get into that to basically be relying on this. And with this, I've got just 2 more minutes to do across. A quick answer from Jatin sir and ASHWIN, both of you will be given 2 minutes time because 11:45 was the maximum time given to me. So because Jatin sir's next session is also that, there are 2 more speakers who are also coming in across to speak. So 2 minutes. Do you feel that the GST Council would be amending this very soon? And the second thing is that what would you give a one-liner advice to all the members here?
No credit on construction of any immovable property if the conveyance deed comes in your name. Second, if you think that the law is going to undergo a change, take credit, don't utilize it, and hope that something in your favor will emerge. But to me, no amendment in the law is required except to change this and with or with and. That is not going to be alter the outcome.
Mr. ASHWIN.
So considering the past trends, I would feel like the or high probabilities are there because considering the trends which have been set by the government, or could be amended as act. And sir, if it is amended retrospectively, it impinges the right of the taxpayer. So it's a substantive amendment which is going to change the facet of the law. So it should not be amended retrospectively. If at all it's amended, it should be prone to challenge is what I would say. Prospective amendment would save the provision. Retrospective amendment would be liable for challenge. We'll have to wait and watch. And second thing, yes, with regard to credit, as what Jatin sir told, if the construction is on your own account, meaning thereby it is you are going to use the property for your own administrative purpose or personal purpose, credit cannot be taken. Whereas you are going to construct the property, going to lease out or rent it out, in simple terms, you can proceed to take the credit on account of the fact you will not be hit by 17.5.
With this, I would like, on behalf of my panelists and myself, thank SIRC of Chennai to SIRC of ICI to for thanking them for giving us an opportunity to come here. It was a pleasure being with you all and a learning experience also. And there are 2 things which I would like to make it as a closing remark. Number 1, the definition of plant is going to be a big headache for all of us, and we have to be super cautious as far as when we look out at the definition of plant, whether we should take it or not take it, and be as realistic as possible. Don't try to say that, okay, fine, I can take this, the depreciation is higher under the other legislatures for a hospital or for a theatre or for a hotel, so I should claim more, and it could be considered across. The definition of plant, again, since we are not under the excise laws, we do not have a definition of manufacture under the GST law. This is going to be a further challenge as far as that is going to concern. Second thing is that the amendments can be a retrospective amendment. I don't foresee litigation coming in because it may be a retrospective amendment. We have seen this in the case of members fees, etc. In the case of clubs, wherein from 2020 they make a retrospective amendment from 2017, and there was no dispute on the same thing, and people have paid it and closed it across. So with this, I would only say that this judgment is an eye-opener for us to look into it. But one good thing this judgment has done is it said that the courts cannot read down the law, and whatever is the law, the judiciary is not the lawmaker, so they have distinct roles to be played across, and this has been appreciated by the Supreme Court. And with this, we thank you very much for having us here. Thank you, sir.
Another is section 16(6). The third is section 128A and rule 164. This topic is of lot of practical importance. So therefore I only urge you to please take special interest to, if you want, make notes, ask me questions. If I am able to answer, I will answer those questions. We'll start with 16(4). I will tell you two key aspects for both, so you are able to appreciate what is going on. First, 16(4) relief is available for 4 years. 128A relief is available for the first 3 years. First 4 years, 17, 18, 18, 19, 19, 20, 20, 21, relief is available for those 4 years. Second, 128A is available only for 3 years, 17, 18, 18, 19, 19. Second, in 16(4), you should have filed the return by 30th November 2021. 17-18 return can be filed by November 21. 18-19 return can be filed by 19-21. 19-20 return can be filed by November 21, or 20-21 return can be filed by 30th November 21. 21-22 you cannot come under the scheme at all. 16(5) says, 16(5) is a retrospective amendment of the law, saying for these 4 years, no matter when you have taken the credit, if the return, 3B return is filed before 30th November 21, all your liability is wiped out. Now, 3 situations are there. 1, you have not got show cause notice. 2, you have got show cause notice under 73 or 74. 3, you have got an order and you have not filed appeal. 3 situations. You have never got a show cause notice. Second, you have got a show cause notice under 73 or 74. Third, you have got an adverse order. You got an adverse order and you have not filed appeal. In any of these cases, the law says you are eligible for the input tax credit. Now, if department has already forcibly collected that money, or voluntarily you have paid the tax, interest and penalty, nothing can be done for you. For such a taxpayer, nothing can be done because he accepted this demand. I don't want to fight, I don't want to raise objections, so he has paid all this. Such people are out of the scheme. But those who have got a show cause notice, not got order, got a order pending in appeal, got a order, forgot to file appeal. Those who have got a show cause notice and pending, those who have got a order and filed appeal which is pending, treatment is different. Those who have got show cause notice and pending, those who have got order and you have filed appeal, it is pending, that is one category. Those who have got a order, whether in adjudication or in first appeal, and you have not filed appeal, that is second category. Where you are a pending category, show cause notice is pending or appeal is pending, please file a simple application, notwithstanding whatever grounds you have taken in the reply or in the appeal. File a simple application saying, please drop the demand due to change of law. That's all. You can write it in 5 pages or in half a page. Please drop the demand due to change of law. 16.4 and 16.5. The law has been changed in section 16.5 to upset the demands under 16.4. So therefore, please, pending cases, please drop the demand. So the adjudicating authority will drop the demand. He will pass an order. Show cause notice says, this is the, you have filed the return before 30th November 2021, but you have filed it belatedly. They have given a show cause notice. It could be an enforcement show cause notice, DGJ show cause notice, audit show cause notice, whatever it can be. It can be under 73, it can be under 74, it does not matter. Please file a simple application, kindly drop the demand due to change of law. Adjudicating authority will have to drop the demand, appellate authority will have to drop the demand. Suppose your show cause notice or your appeal has many other issues, including 16.4, you say in your application, in respect of issue number so and so relating to 16.4, please drop the demand. Other things you discuss on merits, no problem. This is what we will do for pending cases. For cases which are not pending, order is passed, appeal not filed, order is passed in appeal, further appeal has not been filed to tribunal, please file a special rectification pro forma. Now if you go to 161, the portal itself allows you to file a rectification application. Don't file that. A regular rectification application, don't file it. Department is not accepting it. You have to file a special rectification pro forma. In that pro forma, all that you are going to say is, I have got so and so order, due to change of law, rectify the order. Because once an order is passed based on interpretation of the law, it cannot be rectified because it is not a apparent error. A special provision is inserted to say within 6 months from the date of this notice. This notification is dated 8th October. So within 7th April 2025, you have to make an application. Now, why we should make application? They can give it on their own. But department, the notification specifically says you have to file a special rectification pro forma for the 16.4 issue. Suppose you have got an order, you have not filed appeal. There are many other things, 2A, 3B, 3B, 4B, 4B, 5B is also there. 16.4 is also one of the issues. Please file a rectification. Everything else will be continued, but this will be rectified. But if appeal also not filed, department also has taken recovery action and it has been fully discharged, nothing can be done. So please identify 16.5 cases, whether it is for the first 4 years, point number 1. Point number 2, whether that particular return was filed by 30th November 2021, then you are eligible for the scheme. File a special, are you a pending case or a rectification case? If you are a pending case, file a simple plain paper application requesting to drop the demand due to change of law. If you are a rectification case, wait for the portal to activate this functionality, file a special rectification pro forma and they will drop this demand. 16.6 is a very interesting section because this is not only for 4 years. it is for the future also. 16.6 is going to be there in the future also, so therefore we won't discuss 16.6 now. We'll go to 128A. 128A is a special provision that is available only for 3 years. First condition, only for 3 years. Second condition, it must be a 73 notice. If it is a 74 notice, you are not eligible for it. If you are a 73 notice, you are covered by 128A. What does 128A say? You pay principal, interest and penalty waived. There's a friend of mine, he asked me, do you have habit of going to gym? Do you have habit of going to gym? I said, no, I don't have any such bad habits. He said, monthly 2000 rupees is the gym charges. நான் சொல்றது கேட்டா I will get you discount of 500 rupees per month, 1500 rupees only, you can go to gym for 1 month. நான் சொன்னா என் பேச்சு கேட்டா 6000 ரூபாய் மிச்சப்படுத்தலாம், உன் பேச்சு கேட்டா 6000 ரூபாய் மிச்சப்படுத்தலாம், உன் பேச்சு கேட்காம இருந்தா 24000 ரூபாய் மிச்சப்படுத்தலாம். 128A according to me is not to help the taxpayer. 128A is to help the department. 2A not matching 3B, how many got notice? Everybody got notice. If anybody not got notice? No. HLBL 2A also not matching. If 2A is not matching 3B, there is an explanation why it is not matching. It is not that you are liable to pay tax, especially if it is 73. Especially if it is 73. This is one aspect I want to share with you. This doctrine of election. Doctrine of election. You can go by train or you can go by bus. If you go by bus, it means you did not qualify to go by train. Department can give show cause notice under 73 or 74. When they have given notice under 73, it means it is not a fit case under 74. When department has given a notice under 73 saying 2A not matching 3B, it means supplier is not bogus. It is genuine, everything is genuine transaction. That is why we have given under 73. When department is agreeing that it is a bona fide case, why I should pay principal? If you pay principal, you don't have to pay interest and penalty. I don't have to pay principal also, sir. What is this? Why you are asking me to go for the scheme? So please be very careful. Identify among all notices for clients which notices is eligible under 128A, but don't encourage clients to go under 128A if on merits you are confident. It will take some more time to fight. You fight it. You fight it, you may get full relief from penalty, from the principal itself. Everything has a risk. It's a decision they have to take. Taxpayer, how they take decision? Only chartered accountants are busy attending seminars to understand interpretation. Senior members are also asking questions. They're also analyzing the law, coming up with opinion. Taxpayer is not interested in correctness of law. He only wants to know what everybody is doing. I will also do that. Nobody is paying, I will also not pay. Everybody is paying, I am also going to pay. Everybody is doing settlement, I will also get show cause notice. You understand? So therefore, please evaluate that if you fight, if you go for the scheme, full principal you have to pay. Interest and penalty you don't have to pay. But if you fight the case, there is 90% chance you don't have to pay anything. But 10% chance, God is great. That's all. God is great. Or after certain stage, that's all there is. So client has to decide what he wants to do. There are certain twists as far as this whole scheme is concerned. I'll briefly tell you what that is. First, when you look at an eligible scheme, you have to identify those two conditions. It is covered for the first 3 years. Second, it is a 73 notice. Somebody was telling me, sir, I have so many problems are there in my returns. I never got notice, sir. Is it possible anything can be done? Keep quiet for some more time. If you have not got notice, don't do anything. If you have got notice, only this scheme is for such people. If you have not got notice, அப்படியே silent ஆகிட வேண்டியது. If it is a 74 notice, If it is a 74 notice, what should be done? Many times, it is a simple 2A3B, RCM, etc. Those kind of simple issues, regular issues. It is called records-based finding. Nothing they have discovered. They came, verified my books. From my books only, they took out some observations and they raised this demand. Records-based demands should normally not be under 74. But if it is, for some reason, it is under 74, what you should do? 2 steps. If it is an adjudication, tell the officer to pass order fast. Tell the officer to pass order fast. File appeal. In appeal, main ground you have to argue is to downgrade the notice from 74 to 73. Under section 75(2), there is a provision for appellate authority and appellate tribunal to downgrade the notice from 74 to 73. Now, appellate authority may not be interested to allow relief. Let's say there is some reason he feels that it will set a precedent in his jurisdiction, etc. So, he may not be keen to allow relief. But he will certainly be keen to downgrade the notice because he knows very clearly that this is a records-based observation. A records-based observation does not justify 74, it justifies 73. There is circular 1053/2/2017, Central Excess Circular, 10th March 2017, made applicable to GST because the same principles are contained. The Jharkhand High Court judgment of Juhi Industries, which says that Central Excess Circular on this point is applicable even for GST. Now, if you show that circular, appellate authority himself will appreciate that this is a records-based finding, therefore there is no justification to demand under 74 but under 73. So, he has power to allow downgrading under 75(2). Now, please refer to circular number 185. What circular 185 says? If a notice is issued under 74 and the demand is 100, if the notice, suppose it is issued under 73, how much will the demand be? You count the 5 years, notice is given for 100 rupees. If you count only 3 years, maybe the demand will come to 60 rupees. Whenever a downgrading is done, demand also reduces. But there are many instances, even after downgrading, it is covering the period correctly, so there is no demand. So my suggestion, whenever you make an application for downgrading under 75(2), please calculate. If this demand is under 74, it is 100. If this demand is under 73, how much it will be? There are many notices I have seen, 100 rupees demand under 74, interest is another 100 rupees, penalty is another 100 rupees, totally 300 rupees I have got a demand. I go for a 75(2) relief and I recalculate. Suppose they are giving this notice under 73, how much the demand will be? It is still, tax is 100, interest is 100, penalty is 10% under 73. So you do the comparative calculation of present demand, downgraded demand in your application itself and say, please give me 75(2) relief. When the principal is not reducing, when the principal is remaining the same, appellate authority also will be happy to allow you 75(2) relief so that you can quickly go for the 128A scheme. Understood? If it is 73 notice, what is to be done? 74A notice, 74 what notice? If it is a notice, how it should be handled? 73, 3 years only, and you must have a notice. It should be a 73 notice. If it is a 74 notice, quickly. See, many times adjudication is fixed up and party is asking for adjournment. Don't do that. Please go to officer, tell the officer, sir, please pass order fast. No, I cannot give you any relief. Sir, I don't want any relief, sir. Please pass order fast. I want to go for appeal fast. Pay 10% deposit. Anyway, you are prepared to pay 100% of the principal. Pay 10% of the principal. Go in appeal. When you go in appeal, ask for downgrading relief. Of course, other grounds also will be there. Ask for downgrading relief in first appeal itself. Now take an example, you have got an order from first appellate authority, tribunal not formed, what you can do? It's a 74 notice, order confirming 74, now you can't go for downgrading application to first appellate authority, you have to go to tribunal. Circular 224, para 4 says, please file a undertaking that you wish to go for appeal. Where is tribunal? Not formed. Whenever it is formed, that time I will go for appeal. In tribunal, when the tribunal is formed, please file downgrading application in the tribunal. Because the notification says, the next condition for 128A scheme is, you have to make the full principal payment before 31st March 2025. But whenever you are going for downgrading application, whenever you are going for downgrade, you have 6 months time from the downgrading order. So you don't have to make payment. If you have a 74 notice, you don't have to make any payment before 31st March 2025 if you are going for this scheme. Para 4, Circular 224 says where you have to go and make this payment. Next important point to mention is, now if you see, many people have made pre-deposit payments with DRC 3. Para 7.2 of Circular 224 says, whenever you have made a pre-deposit payment under DRC 3, please file DRC 3A application. So that you are linking. See, we understand, as accountants, we understand matching concept. Purchase last year, sales next year, first year loss, second year full profit. Possible? Not possible. First year when we made the purchase and we did not have the sales, you carry this forward as inventory to next year. What is this called? Matching concept. 224 circular is trying to do matching concept. Which liability, which DRC 3? Here a small example. Tamil Nadu is very famous outside Tamil Nadu. GST administration. When a vehicle is intercepted, they will give temporary login. When a vehicle is intercepted, they will give temporary login in the name of the consignor, consignee or the transporter, and they will impose penalty. Outside Tamil Nadu, they are talking about Tamil Nadu administration like this. Vehicle is going from Karnataka to Tamil Nadu. It is intercepted. Officer says, you have to pay 200% penalty. For whatever reason, good reason, not good reason. Application is made to officer saying, please give temporary login, I want to make payment. Adikala time illa. You are having registration anywhere else. Sir, I am having Karnataka registration. You please go to Karnataka registration and pay penalty. Sir, what penalty I will pay, sir? You pay IGST. You say Tamil Nadu, IGST you pay in Karnataka. So dealer has gone to Karnataka and paid IGST penalty, showed the challan to the officer released the vehicle. 10 days later, assessee filed refund application in Karnataka. Sir, vehicle is stopped in Tamil Nadu, sir. Oh, what happened? Sir, settled, sir. I don't know how, but everybody understands. So, vehicle is released. So, you paid in Karnataka. What? No sense you have. No, sir, I am trying to improve, sir. Okay, file refund application, refund also sanctioned. Why? Matching not done. Liability on the liability ledger must match with the DRC 3. Now, pre-deposit has to be paid via APL 1. Pre-deposit is paid through DRC 3. So, they have created this module called DRC 3A to match the which ARN number is matched against this 3A, so that the liability comes down. When you go in for this 128A scheme, what is the principal amount is the remaining amount and not the original amount. So please be very careful. Matching has to be done fast. Now, when you make this application, the process is quite straightforward. If you are a show cause notice case, file SPL 1. File form number 1 for show cause notice case. If you are an appeal case, file SPL 2. Before the jurisdictional officer only, not before the appellate authority. When you file this application, if the order is, if the notice is served online, data will get auto-populated. But if your notice is manual, you have to enter the data manually. Alright? Once you upload this SPL1 and or SPL2, officer will scrutinize and give you a reply, SPL5 accepting what you have filed as final conclusion, or SPL 6 saying rejecting. I just confirm. SPL 5 application, SPL 7 is rejecting your application. 5 and 7 to reject. 5 is to accept, 7 is to reject. Now there is a very important aspect. As chartered accountants, should we file this application? If we are responsible for filing monthly returns, if we do compliance work, this application process we must become very familiar. Somebody asked me, do you file monthly returns? Said, sir, I don't know how to file monthly returns. GST is very difficult, sir, very complicated. Some youngsters, chartered accountant knowing, I will give you their phone number, you please, they are very sharp at this, sir. This column, that column, 2 computers also, they know how to type, sir. In your whole computer, so therefore, it is not possible to file returns, sir. Said, what is this, you are saying, when your introduction, they said you are doing GST practices. But sir. During introduction, they are very kind and generous in the institute. Introduction GST returns is a mistake waiting to be committed. The GST returns assignment, it's a trap. It's a mistake waiting. I returns file நான் ஏதோ மிஸ்டேக் பண்ணி அப்புறம் ஊர் முழுக்க போய் வந்து ஒன்றுமே தெரியாது, வெறும் இன்ஸ்டிடியூட்டில் பேசுறதால ஆயிக்கு ரிட்டர்ன்ஸ் எல்லாம் ஃபைல் பண்ணவே தெரியாதுன்னு சொல்லி இந்த நஷ்டம் ஏற்படுறதை விட யூ ஃபைல் தி ரிட்டர்ன்ஸ், யூ மேக் த மிஸ்டேக், கம் டு மீ வித் த நோட்டீஸ், ஐ வில் ஹெல்ப் யூ. இது பெட்டர். ஐ ஃபைல் த ரிட்டர்ன், ஐ மேக் மிஸ்டேக், then you will go and tell everybody that this fellow does not know GST. You file the return, make mistake, I will not tell anybody. Quietly I will help you handle the show cause notice. So this 128A, the 16.4, all this online business, all our clients, I called them for one seminar, told them, சாப்பாடு போட்டு டீ காஃபி எல்லாம் கொடுத்து, ஏன் சில understood everything, எல்லாம் sample format கொடுத்து திரும்பி வராமல் போயிடும். Don't come here, you go and file on your own. Once if you show cause notice case, file SPL 1. If it is an appeal case, file SPL 2. If whatever you have filed pochina, you will get notice in SPL 3. Appo vaango. When you have got a notice in SPL 3, then you can please be very careful. When you get a notice, don't go into no, this 2A is not payable, 3B is not payable. Are you eligible for the scheme? What is eligible? Is it covered by the 3 years? Yes. Is it covered by a 73 notice? Yes, that's all, nothing further to be done. So you file this return, file this application, and he has to pass an order. Now what officer will do? After I finish this forms, I will tell you the timeline so you understand. Once you file this, you have to file, you get notice in SPL 3, you file reply in SPL 4. Form 1 is for notice case, Form 2 is for appeal case, Form 3 is for notice, Form 4 is for reply. Once you have filed the reply, officer is happy, he will accept it in Form 5 and tell you this is concluded. Now, if you are not satisfied, if officer is not satisfied, he will reject in SPL 7. Now, against the rejection, you can file appeal. Now, already we are in appeal. See, that is the beauty of GST practice. ஏற்கனவே ஒரு ஆபரேஷன், அதுல ஒரு வாட்ச் வெச்சு தைச்சிட்டு இப்போ இன்னொரு ஆபரேஷன். So therefore you file one more appeal saying why the rejection is wrong. In that appeal, don't go into Ana, Avana, all those things, don't 2A, 3B, all that you don't say. Only short point. Why the rejection is not correct? It is covered by 3 years. I have got 73 notice. I have paid the principal. Therefore, it should be allowed. That's all is the point. If the appellate authority is very happy, excellent, you have, you are supposed, you are eligible. Why officer rejected? He should not have rejected. He will directly give you SPL 6 and settle this case. Appellate authority also has power to give you a exit from the scheme, form number 6. Then you have to decide. If let us say appeal is correct what officer said, you are not at all eligible. Now you have to file one undertaking in form number 8, saying that against this rejection you are not going further appeal. And 1, 2, 3, 4, 5, 6, 7, 8. Correct? No? 1, show cause notice case. 2, appeal case. 3, notice. 4, reply.
5 acceptance, 7 rejection, appeal against 7, accepted 6, not accepted, that's all, you will get order 8. 8 you will file a declaration that you don't want to go in further appeal. Now two things are going to happen. One, if the rejection you are not happy, you will go in further appeal. But if the rejection you are satisfied, you don't want to fight this scheme. Basically you are not eligible for 128A scheme. Under a lot of enthusiasm and total confusion, you went for this scheme. You understand? You will be restored status quo ante. On the date, what is the condition you are in before the scheme started, you will go back to that condition. If you are in show cause notice stage, continue. If you are in appeal stage, continue. Because one of the conditions for filing SPL 1 and 2 is that appeal also must be withdrawn. Oh, you made me withdraw appeal. Now you have given me notice and said you are rejected for the scheme. What I will do, in case you file SPL 8 saying that I don't want to fight this first appeal order anymore, you will go back to before the appeal was restored, was withdrawn stage. Therefore, strategically, you file up, see, how to file appeal, APL 1. How to withdraw appeal, APL 1W. Now, when you file APL 1W, what grounds you are saying in the appeal, in the grounds? I don't agree with this liability. I want to go for scheme, that is why I am filing application. So therefore, your withdrawal itself is conditional. You don't want to agree, but since scheme is there, you are required to withdraw the appeal. While filing SPL 1 or SPL 2, you should show that you have filed at least the withdrawal application. You cannot travel in two boats, like they say. You cannot file appeal here also and go for scheme here also. In case your application is rejected and the appeal also gets rejected, then you are back in the original position. You have to continue what is to be done. I'll give some indication of the dates, very important. You have to pay by 31st March 2025. You have to file application by 30th June 25. 3 months after making payment, you have to file this application. On 30th June only, you don't have to pay. You don't have to file. You can file in April first week, May, June. After June, you cannot say, I want extension. Please contact SIRC chairman to send letter to government. Adella vanda. 31st, within 31st March, you have to pay. So calculate what is your liability. What is the liability already paid? Matching concept, 3A has been done. What more is remaining? You pay the principal. Para 4, Circular 224 says how you have to make your payments. Make the payments, and then when you fill SPL 1 or 2, all the payments matched against the notice will be populated in this table. Now, two other interesting aspects in the FAQs I said. Transition credit dispute, can you go for the scheme? Yes. Transition credit also you can go for scheme. My problem is, how can they give you show cause notice for transition credit itself? 73 cannot be given for transition credit, because transition credit is neither output tax nor input tax credit. But you have rule 121 which says that the same provisions relating to tax can be relied upon to demand transition credit. Rule cannot give that power to section. You have Pioneer Silk Mills decision of Delhi High Court. But anyway, they have given this notice, so we want to close this issue. So interest and penalty is dropped. So therefore, we are happy to pay the payment. Now, this 31st March, you have to make payment. Where you are going to make the payment? You can make payment through cash ledger, or you can make payment out of 2024 ITC also. This is first 3 years liability. That time you may have had credit or you don't have credit. You can pay it out of your current credit also. Today, if you have taken any credit, or December you are taking credit, January you take, if you plan to go for the scheme, whatever credits you take, accumulate it and use it. You can use it for paying under the scheme. You pay by 31st March. You will file application by 30th June, 3 months from 31st March. But the interesting thing is, whenever you are going for 128A scheme, remove 16.4 demand and go for the scheme. Remove 16.4, because for 16.4 already we discussed, you are going to file a request letter or a rectification letter. One of the two you are going to file. So even in this case, if it is a 16.4 item, don't include the 16.4 principal, interest and penalty as part of this amnesty scheme. Pay by 31st March, within 3 months make an application. As soon as you make an application, notice must be given within next 3 months. Suppose you have made application on 30th of April, May, June, July. By July you must get a notice in SPL 3. If you don't get notice, you are deemed to be accepted. Please keep very carefully monitoring whether you have got, everything will happen online. You filed online, whether the notice came online, you have to identify. From getting the notice, within 1 month you have to file reply. From getting the notice, within 1 month you have to file reply. Please be very careful. In that 1 month, don't delay. I never got it, login was not opening, I was only seeing mobile phone for YouTube video, I was not out. I have tried all that, it's not working. At least now, when I used to teach CA final in the branch. Last class, finished all discussion, custom, central excise, services, everything over, any doubts, any questions, last, always one boy will be there in the class. Every batch is having one student like this. Sir, should I quote case law or I should not quote? See a final, he is having doubt whether case law is necessary or not necessary. That anyway, everybody here knows what the answer is. Next question. Sir, my handwriting is not nice. Well, how I should improve my handwriting? Handwriting improvement you should not do before exam. Teacher will, valuer will change power of the glasses and correct your paper. After exam, full life you spend improve your handwriting. When you are filing this application, don't give all excuses saying that login was not opening, downloading, uploading. Within March, pay the tax. Within 3 months, file the application. Within 3 more months after filing application, they will give notice if they want to give notice. Once you get notice, within 1 month, file reply. If they give you a SPL 5, happy. If they are not giving you SPL 5, you will get rejection in SPL 7. SPL 7 you have to file further appeal. So please be very, very careful of timelines. I don't want to dilute the importance of the timelines in this, because if you miss the timeline, then substantive remedy will be lost. If you follow the scheme, you will save 6,000 rupees. If you don't follow the scheme, you will save 24,000 rupees. But if you want to go in for the scheme, please follow these timelines. Now my question is, why anybody will follow the scheme? Why anybody will follow the scheme? They know they have done some hanky-panky. All amnesty scheme for someone who has done some hanky-panky. Someone who has done nothing, they will not go for the scheme. Why government is giving this scheme? They have not given notice itself correctly. They have not given notice itself correctly. If those kinds of notice go in appeal and go into tribunal and high court, there is great embarrassment waiting for the government. So my reading is, this is to solve pendency from the government side, because many notices have been issued. Many notices have been issued, unmindful of all the legal provisions. So one instance I tell you, a notice was issued saying, you are a goods transport agency, you are having other income, 1 crore, you are liable to pay GST of 18% on this 1 crore. The client came in the last minute, already 2 hearings have been fixed, they have not attended. 3rd hearing, it says a final hearing, and he said, sir, can you draft reply? Said, okay, we can draft reply, but we don't have time. I have to go to Chennai. I don't have time. So I said, what can you do about this notice? I said, see, do you want to pay this demand? Do you want to pay this demand? Client is asking, sir, should I pay this tax? I will not tell you whether you should pay this tax or not. You decide whether you want to pay this tax or you don't want to pay the tax. அதெல்லாம் நான் சஜஷன் கொடுக்க மாட்டேன். அப்புறம் நீங்கள் தானே சொன்னீங்க கட்ட வேண்டாம்னு சொல்லி. தேவையில்லை, யார் சொன்னால் கட்டணும்? அதெல்லாம் அந்த வீராப்பெல்லாம் போயாச்சு. இப்போ கட்டணுமா வேண்டாமா யூ டிசைட். ஒன்ஸ் யூ டிசைட், சார் அவ்வளோ காசே இல்லை சார், ஐ டோன்ட் ஹாவ் மணி. பணம் இருக்குன்னா கன்ஃபியூஷன், கட்டணுமா வேண்டாமா. பணமே இல்லைன்னா கிளாரிட்டி. கட்டுறதுக்கு பணமே இல்லைன்னா கிளாரிட்டி. எனக்கு ஃபீஸ் கொடுக்குற அளவுக்காவது பணம் இருக்கா? அவ்வளோ இருக்கு சார், அதுதான் அக்கறை. டேக்ஸா? சரி, ஃபீஸுக்கு காசு இருக்கா? சார் இந்த நோட்டீஸை வச்சு ஏதாவது பண்ண முடியுமா? ஃபீஸ் கொடுக்க முடியும்னா எல்லா நோட்டீஸ்க்கு ஏதாவது ஒன்று பண்ண முடியும் சார். அவுட்கம் அது காட் இஸ் கிரேட், அவருக்கான பார்த்துப்பாரு இல்லையா? ஸோ தேர்ஃபோர் ஃபீஸ் வாங்கி கிளைண்ட் சொன்னேன், we will not file the reply. என்ன சார் இப்படி? அப்படிதான், ரிப்ளை கொடுத்தா பிரச்சனை. எக்ஸ்பார்ட்டி ஆர்டரில் நல்ல அட்வான்டேஜ் இருக்குது. ஸோ we got எக்ஸ்பார்ட்டி ஆர்டர். அப்பீல் ஃபைல் பண்ணோம், அது வேறு ஃபீஸ் இல்லையா? அப்பீலுக்கு தானே இது அட்ஜுடிகேஷன். அப்பீலில் ஃபைல் பண்ணி அப்பீலில் ஒரு கிரவுண்ட் என்னது? டிபார்ட்மெண்ட் ஹேஸ் அக்செப்டட் தட் யூ ஆர் ஏ ஜிடிஏ. Assessing is a GTA ன்னு சொல்லி டிபார்ட்மெண்ட் ஹஸ் அக்செப்டட். ஒன்ஸ் டிபார்ட்மெண்ட் ஹஸ் அக்செப்டட் யூ ஆர் ஏ GTA, வாட் இஸ் ரேட் ஆஃப் டேக்ஸ் ஃபார் GTA? 5% without ITC or 12% with ITC. இது என்னது 18%? அப்படியே ஷாக் ஆயிட்டார் அப்பீலேட் அத்தாரிட்டி. என்னது யுவர் சார்ஜ் 18%? சார் திஸ் இஸ் நாட் டோட்டலி நாட் கரெக்ட். எஸ் இட் இஸ் நாட் கரெக்ட், யூ கேனாட் டிமாண்ட் 18% டேக்ஸ். அவர் சொன்னாங்க, ஒரு வேலை செய்யுங்க, யூ ப்ளீஸ் பிரிங் த புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ். அப்பீல், ப்ளீஸ் பிரிங் த புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ். சார் ஐ எம் வெரி சாரி, ஐ வில் நாட் பிரிங் த புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ். என்னது யூ ஆர் நாட் பிரிங்கிங் த புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ்? ஐ எம் அப்பீலா. எல்லாம் தெரியும் சார், I will not bring the books of accounts because you are not audit officer. இல்லைப்பா, ஒரு காலத்தில் நான் ஆடிட் ஆஃபீஸர் இருந்திருக்கேன், அதெல்லாம் இருக்கட்டும். இப்போ you are not audit officer and appellate authority is not an adjudicating authority. 2(4) adjudicating authority definition excludes appellate authority. You cannot. என்னது இப்படி சொல்ற? I am a fact finding authority. Yes sir, you have to find the fact from the file, not outside the file. I will not produce the books of accounts. இதுவரை யாருமே இப்படி சொன்னதில்லை சார். இனிமே படிப்படியாக நான் போய் செமினார் சொல்லிட்டு வர போகிறேன். படிப்படியாக இப்போ எல்லாரும் இப்போ சொல்ல ஆரம்பிச்சிடுங்க சார், நோ புக்ஸ் ஆஃப் அக்கௌண்ட்ஸ். என்னப்பா ப்ரமோஷன் வர காலத்தில் இப்படி எல்லாம் பண்ணுறேன்னு சொல்லி ஒதுக்கி வச்சுட்டாங்க. அப்புறமா டீ ஆர்டர் பண்ணாங்க. when the officer is ordering tea, what does it say? Case is going in the right direction. ஐயோ பெரிய வார்த்தை, அப்படியெல்லாம் கிடையாது. கேஸ் இஸ் கோயிங் இன் த ரைட் டைரக்ஷன். அது கேட்டாங்க, என்னது மேட்டர், வாட் இஸ் திஸ், யூ ஆர் நாட் பேயிங் 18% டேக்ஸ், வாட் இஸ் இஸ் அதர் இன்கம்? சார் GTA அதர் இன்கம் என்ன பெருசாக இருக்க போகுது? சேல் ஆஃப் ட்ரக் தான். சேல் ஆஃப் வாட் இஸ் இட் கேன் பி 5% or 12%. ஒன்ஸ் யூ ஆர் ஹேவிங் அதர் இன்கம் இன் அ GTA, இட் இஸ் ப்ராஃபிட் ஆன் சேல் ஆஃப் ட்ரக். அந்த காலத்தில் ட்ரக்கு 28% டேக்ஸ். அப்படியா 28 கட்டவரியா? சார் நோட்டீஸ் இருக்கிறதே 18, நீங்கள் 28லாம் கேட்க முடியாது. ஸோ என்ன பண்ணலாம்? சரி, ஐ வில் டேக் அ டிசிஷன், போயிட்டு வாங்க சொல்லி 1.5 years ஆச்சு, ஆர்டரே வரல. ஸோ தேர்ஃபோர் ப்ளீஸ் பி வெரி கேர்ஃபுல். We are doing damage to the case by introducing new material that is never there as part of the show cause notice. Many lakhs of show cause notices are issued with fatal defects. சாதாரணமான ஸ்பெஷல் சாதாரணமான டிஃபெக்ட்ஸ் எல்லாம் கிடையாது. வெரி ஃபேட்டல் டிஃபெக்ட்ஸ் ஆர் தேர் இன் த நோட்டீஸ், அண்ட் இஃப் தோஸ் நோட்டீஸஸ் கோ டு ட்ரிபியூனல், தே வில் பி ட்ராப்ட். ஸோ தேர்ஃபோர் தேர் இஸ் அ enticement to say pay the principal, interest and penalty will be dropped. But if you listen to the scheme, you will save 6,000 rupees. If you don't listen to the scheme, you will save 24,000 rupees. So wherever I have identified, I have told taxpayers, I don't encourage you to go for the scheme, because those who have done hanky-panky, they anyway don't deserve our support or services, and we are not going to extend our support or services to people who do hanky-panky things. But people who are diligent in their business, and due to data mismatch, due to some misunderstanding, unbilled revenue. What is unbilled revenue? அவர் காதில் டர்ன் ஓவர் எஸ்கேப்பிங் அசஸ்மெண்ட் தான் விழுது. அன்பில்ட் ரெவென்யூ, ஓ பில்லே பண்ணலையா, ஆனாலும் உங்கள் ரெவென்யூ, தட் மீன்ஸ் டர்ன் ஓவர் எஸ்கேப்பிங் அசஸ்மெண்ட். இது நமக்கு தான் தெரியும் வாட் இஸ் அன்பில்ட் ரெவென்யூ. ஆஃப்டர் ஃபைனல் அதுவும் கொஞ்சம் கொஞ்சமாக மறந்து போயிடும். ஸோ தேர்ஃபோர் there are various reasons for which department has issued show cause notices. சில சமயம் ஆஃபீஸர் வந்து they have issued a notice, ஆஃபீஸர் ஃபோன் பண்ணி கேட்டாங்க, என்ன சார் வாட் இஸ் திஸ் நோட்டீஸ், என்னப்பா தெரியாது, எனக்கு ஒரு காப்பி வாட்ஸ்அப் பண்ணுங்க, ஏன் பார்க்கலப்பா, இல்லை லாகின்ல போயிட்டு இருக்கு. ஸோ தேர்ஃபோர் notices have been issued without even examining what is that contents of that notice. ஏதோ தமிழ் சொல்லலாம், ஏதோ ஒரு ஐஐடிலலாம் வந்து ஆராய்ச்சி பண்ணி நோட்டீஸ் எப்படி கொடுக்கணும்னு சொல்லி ஏஐ வச்சு என்னமோ நோட்டீஸ் வருதா தமிழ்நாடு. ஸோ தேர்ஃபோர் ப்ளீஸ் பி வெரி கேர்ஃபுல். Most notices are defective. I strongly encourage everybody to get rid of this scheme. Don't bother about this scheme. Fight your cases, file appeal, argue your cases. You have a far better chance of saving the principal also. Just because a scheme is out does not mean we will rush to avail the scheme. That relief that is being given is not at all a relief. When principal itself is not payable, what is this discount for interest and principal? So therefore, please be very careful. Let taxpayers make the decision whether they want to go for the scheme or they don't want to go for the scheme. Tax consultant should not make that decision. Tax consultant should not make the decision whether someone should go for the scheme or not. Make a list, identify eligibility, quantify how much has to be paid if the scheme has to be availed, what is the relief, inform the taxpayer sufficiently so that they can make this decision whether they want to go for the scheme or not. Please be very mindful that it is not our responsibility. It is not our responsibility to avail this. Our responsibility is to educate taxpayers about the applicability of the scheme, the relief as well as the amount of tax to be discharged. Next, many times I found tax consultant's question is fees. How much fee do we charge for this service? This is not a service where we have to charge fees. This is not a service where you have to charge fees. Young chartered accountant telling you, don't think this is your big area of service. I have filed 200 applications. இதெல்லாம் ஒரு பெருமையும் கிடையாது. டிராஃபிக் போலீஸ் பிடிச்சா ஃபைன் கட்டாம தப்பிக்க முடியுங்கிறது திறமையே கிடையாது, ரொம்ப கேவலம். Alright, this is not a service that you have to charge fees for. Your time is going to be spent. You're going to address somebody's mistakes he has committed and he wants to redress it. If you want to charge fees, it will at best be very nominal. என்ன சார் அந்த இன்ட்ரெஸ்ட் பெனல்ட்டி எல்லாம் சேவ் பண்ணி எல்லாம் உங்களுக்கு கொடுக்க வேண்டியதாக இருக்கு. All this, it will only attract disrepute. I would encourage you, please educate clients to understand how the scheme works. Let them file. Like I told you about filing returns. Filing returns assignment is a mistake waiting to be committed. Better you commit the mistake and come to me for remedy than I commit the mistake and you will go and tell everybody that this fellow is only fit for seminars. So therefore, please be very careful how you choose the applicability of the scheme. Timelines are extremely important. Now the issue is practically 1st November the scheme is notified. Portal only not working. All the functionalities have not been activated. Yes sir. Yaroda battery sir? Sir? அது பரவாயில்ல, நம்ம பேட்டரி போட்டுக்கிட்டு இருக்கேன், அந்த பேட்டரி டெட் ஆகிட்டு போகுது. ஸோ தேர்ஃபோர் என்ன சொல்லி வந்தேன்னா பரவாயில்ல ஆச்சு. என்ன சார்? Functionalities are not working. Government GSTN has issued an advisory to say that in the first week of January all the functionalities will be open. But my question is, 1st November the scheme was notified. I had 5 months time. November, December, January, February, March. 5 months to pay this money. If January itself the scheme is going to be open, is there a likelihood that that last date is going to be extended? In the history of GST, have you known any due date to have been enforced with utmost seriousness.
Only invoice.
You understand? So there, but let us not take chances with this. If anyway the client has decided, how much time client wants to decide whether he will go for the scheme or not go for the scheme? 3 days more than enough. In those 3 days, he does not have to arrange the money. Arrange the money up to 31st March, isn't it? He needs to make a decision fast. Normally, taxpayers choose to delay the decision. Taxpayers choose to delay the decision, and then we are there to take last minute tension. Sir, from article period, I know how to do last minute work, sir. Hall ticket kedachappada na book thedra. Appadi palagi pochu. Therefore, please educate the client. Let them make a decision quickly. To implement the decision, you can start accumulating credit, start making installment payments. You don't have to pay everything in one go. But if you miss the last date to make the payment, you are out of the scheme. Is there any equity in the scheme? Many people say this, sir, how are you going to cut it, sir? The scheme is not a scheme of equity. This scheme is a scheme only. Whoever is covered will get the relief. Whoever is not covered will not get the relief. So therefore, it is important to identify how to strategize what needs to be done. Now within the notice, there are many show cause notices that have been issued only for interest. Many show cause notices issued only for interest. Let us say 3B is filed late. 3B is filed late, interest is not paid, and a show cause notice has been issued. Can we go in for the scheme? Anyway, tax is already paid, now interest also I will get amnesty? No. Please pay attention to 7512. What is 7512? Wherever there is an undisputed arrear, that is self-assessed tax, R1 minus 3B is an example of undisputed arrear. In your reply to show cause notice, please see whether you have informed that you dispute the demand. Many times you are giving reconciliation. By giving reconciliation, you are admitting wrongdoing. You are only giving explanation as to correctness of quantification. First, if you have disputed the demand, then it becomes a disputed demand and not an undisputed arrear. Undisputed arrear, if it is demanded through show cause notice, you will not get the benefit of scheme. What is an undisputed arrear? R13B is a good example of undisputed arrear. Then 2A3B is an example of 2A3B is a disputed arrear, because if you see 88C and 88D, you will identify how this operates. Third thing, if tax is paid, interest is not paid. What are the instances? Royalty, RCM, then your belated filing of returns, reversal of credits. Where interest only is demanded in a show cause notice, please examine if the interest is on account of a disputed demand or an undisputed demand. If the interest is on account of undisputed demand, you will not get the benefit of the scheme because they are entitled to take action under 7512. So therefore, if you have any such only interest demands, please examine very carefully to identify how you want to proceed in this matter. Now, these are aspects that are, how much time does department have to scrutinize applications and give notice in SPL 3? 3 months time there. How many applications do you think will be filed in the country? The whole country. How many applications? In Chennai, how many applications might be filed? How many notices are issued in Chennai? Any guess? Somebody? Sir, you will guess. How many notices? You only say. How many notices must be given in Chennai for the first 3 years of GST? 1 plus 1, 7.
1,000 notices.
1,000? Chennai?
First 3 years.
First 3 years.
Late GST na enna puriyano?
1,000 notices is sufficient. Anybody else wants to guess? 1 lakh notices, sir, for example. Anybody else? Last row? 45 lakhs, sir. Every. If 45 lakh notices are given in your ward or range, the proper officer is a jurisdiction proper officer. Suppose one officer has 10,000 notices, the applications are filed. In 3 months, he has to issue notice. Or he has to accept. 3 months he has to issue notice or accept whatever you have filed. What is the likelihood? When in doubt, issue notice. or because you are too busy, accept every application. Which is the strategy that may be followed? When in doubt, the issue notice. That's all. Give this notice. Let's see what will happen later. Now you should give reply. Please be very careful. If your application is accepted, interest and penalty waiver has to be given. If your application is rejected, interest and penalty can be collected. So there are various strategic aspects also you may have to keep in mind based on the merits of your case. Those who have got notices are so many, those who will go for applications are so few, and among those who will go, notices are likely to be given to a vast majority of cases. So my question to you is, are you prepared to reply to SPL3 notice? To A3B notice ke ipo adiginathu. Ipo vandu SPL3 notice ke enna reply? Please be very careful. Limit your responses to eligibility for the scheme, satisfaction of preconditions. Eligibility of the scheme, 3 years, 73 notice. Satisfaction of the scheme, condition, payment before 31st March. That's all. What else you have to do? Nothing else you have to do. Third thing at most is timelines. Timelines. Stick to the timelines. Have you complied with the timelines is very important. If you identify these aspects, then I think you will be very, very safe. Few aspects I want to mention since we have little bit of time. But let us save the time that is used up in the earlier session so that I don't eat into your lunch break. When there is a difference between 2B and 3B, you will get a system generated notice under 88C. And in DRC, you'll get a notice in DRC 1C. Please be very careful. When you get a notice, you are required to file a reply within 7 days. If you don't reply or if the reply is not satisfactory, 88C3 says you will get a show cause notice under 73 or 74. So 2B, 3B mismatch will not result in 75 action, 79 action. It will go straight to a show cause notice. Now if you see rule 142B, 142B says whenever there is any 88C demand, 88C is R13B, 88D is 2B3B. If there is any R13B mismatch and your reply is not satisfactory, department has power, officer has power to issue a DRC 1D notice under rule 142B. Now if you see rule 142B, it says on account of 88C or otherwise. This or otherwise is very dangerous because for whatever reason department believes there is an undisputed arrear, they can issue a DRC 1D 7 days, go and attach bank account. Now to say that some demand is undisputed, there should be something from the taxpayer side that says he did not dispute. Please be very careful. DRC 1C reply, how you file. This is not matching, that is not matching, you have to reverse. In your reply, are you giving explanation or are you taking a stand? I keep saying this again and again. Reply to a notice is not a justification of self-assessment. Reply to a notice is a disclosure of the stand you are taking. I dispute the demand. To dispute the demand, do you have to give proof? It's a stand you are taking. I dispute the demand. Second, I reject the allegation. You don't, why do you reject? I reject. Who has the burden of proof? The one who makes the allegation has the burden to prove the allegation. The one who has to answer the allegation has to first be satisfied that the allegation is adequately substantiated. Now, 2B has to match with 3B came in from when? 2B has to match with 3B came in from when? 1/10/22. They introduced rule 36(4)B. Rule 36(4) had become famous in 2019 because of the 20% relaxation. The 20% is not a right, it's only a relaxation. The 36(4) was substituted from 1/10/22 to say that only what is flowing into your 2B you can take as credit. Then what about 16(4)? You can take that same credit subsequently. Portal is insisting that all 2B will auto-populate into 4A2 and 4A3. When did the functionality get implemented? I suggest to you, whenever you get any advisory on GSTN, please screenshot that advisory and store it, because tomorrow you have to explain. I have stored some screenshots from 110.22 that is 2B and 3B matching was finally implemented on the portal only from 1/8/23. Now if you get a show cause notice saying that 2B is not matching 3B, does it mean you are supposed to take the entire ITC and reverse what is ineligible? It came in only from 110.22, implemented from 1/8/23. Until then what should happen? You could have taken only net credit. I am total ITC 100, eligible for 60. Should I show 100 and minus 40, or can I show only 60? I can show only 60 up to 1st August 23. Practically, legally only up to 1st October 22. Next aspect to consider is, prior to 110.22, two examples I will give you. I have negative turnover. My credit note value is more than my sales for the current month. Previous month sales, I have given some credit note. This month my sales is 0, so my turnover is negative. Can I show negative in 3B? I can't show negative in 3B. What taxpayer will do? He has taken that negative tax, added to ITC. He has taken that negative tax to be adjusted, increased his output ITC for that month. Now what notice he is getting is 2A minus 3B. Your 2A is less than the ITC in 3B. Friends, let me tell you two aspects. One, 2A must match with 3B if everybody has filed returns correctly. 2A is not matching 3B. Circular 183 is not the only solution. Many people any mismatch, they are giving certificates. Certificates are also available freely in the market. And at a time when currency notes are being printed, what is certificate? Somebody said, sir, UDIN is there, sir. There was somebody in the story someone was saying, in big cities, counterfeit note is very common, people said. So this person, he printed a 400 rupees note. It's only story, not here, nobody sir. 400 rupees note he printed. He did not want to circulate it in Delhi. So he went to one small town. He went to a small town and he said he bought some food items for 50 rupees. And he gave this 400 rupees, behaving very normal, as if nothing is unusual. That shopkeeper gave him one 350 rupee note. Please be very careful. Everywhere all sorts of things are going on. If 2A is not matching 3B, don't think 183 circular is your final destination. Many times it is possible that your negative adjustment people have added to ITC. Is it allowed? If you see rule 42(6) of the omitted rule, it says whenever you are supposed to reverse ITC, the section itself said add it to output liability. Rule 71(4), which is omitted subsequently, says whenever you have to reverse ITC, you can add it to output. So if output tax has to be reversed, if input credit has to be reversed, I can add it to output tax liability. Why? Because my closing balance should be correct. If my output has to be negative, I can take that under ITC also. Is an implication that will come from the section and the rule 42 and 71 that was omitted. Only after 110.22 is this documentation hygiene came to be enforced. How it came to be enforced? By notifying 36(4)(b). Prior to 36(4)(b), self-assessment is correct. Don't simply submit declaration unless you are sure that it is a supplier-led mismatch and not the assessee-led mismatch. If assessee-led mismatch is there, definitely you will need to identify how this needs to be reversed. Next aspect to examine is when you are looking at credit notes credit notes is nothing but suo motu sanction of refund. So please be very careful. When somebody issues a credit note, tax has been adjusted. Therefore, credit reversal department is insisting. So therefore, please be very careful how you identify whether credit has been reversed or not. Now, another CS certificate has been introduced saying that get a CS certificate that that person has reversed the credit. Not only it is sufficient that I should upload the credit note on the GSTR1, but I should also get a certificate. This is endless. So therefore, this, whether we like it or not, IMS is going to address many of these concerns. IMS is going, but IMS needs to go through a process of familiarity, needs to go through a process of identification of how to address these things. As far as tax professionals are concerned, we need to identify the nature of the business, and the HSN code of the supplies don't have to match. Correct, no? Nature of the business and HSN code don't have to match. We have to identify which of those notices we have to identify here. If all those notices we rush to get it covered under 128A, taxpayer is probably going to lose. Historically, we have seen in the last 7 years, many who went ahead and regularized their compliances found that many others who had far greater liability enjoyed more relief. Taxpayer needs education. As tax professionals, our responsibility is to only impart that education. As far as deciding whether they want to avail this option or not has to be left to taxpayers. I thank SIRC for giving me this opportunity and all members for your participation. Thank you very much. So questions? Any questions? We have a few minutes. Okay, thank you very much.
Pradeep Reddy to occupy the dais. It's my pleasure to introduce CA Pradeep, who has a decade of experience in indirect tax, custom duty, foreign trade policy, service tax and state excise law. He has worked with PwC Deloitte before starting his practice from April 2024. He advised Indian and multinational clients from varied industries ranging electronic, gaming, e-earning, fiber optic cable manufacture, and etc. His expertise extends beyond compliance. He penned a couple articles on GST and custom in a monthly newsletter, Bangalore branch of SIRC of ICI. He also plays a role as an indirect tax committee member of the Karnataka State Chartered Account Association, where he is a part of team organizes monthly webinar. He is actively involved with CII Karnataka chapter and serving on his economic affair panel. He is also part of Bangalore chapter of Young Indians, a social voluntary association. Thank you, sir, once again. I request Y. Narayanan sir to present shawl and memento to our speaker. Hand over to the speaker.
Thank you, Sonia, for the lovely introduction, and I thank SIRC for this opportunity. So, good afternoon, everyone. I know I have a challenge or privilege of giving my talk immediately after lunch, so hopefully I'll not make you sleep after sumptuous lunch. And the other thing which I remember about CA Institute at Chennai is, while during my CA days during 2009-10, I used to hear from my faculty a joke wherein they used to say, okay, there is a quote right outside the CA Institute, even today also it must be there. It says, Jesus never fails. Then the faculty go on to say, okay, let him try CA. So that was the anecdote I listened about CA Institute in Chennai long back, and so this is probably my second time I'm coming here. So after 14 years I'm coming here. So 2010 was the last time I came here as a student for a to just sort out my IPCC results, etc., etc. Then that time it was intimidating. So me coming from a small town and coming to CA Institute, I don't know what was CA those days, etc. And life has come a full circle. So happy to speak in front of you today. So and so we'll start up with the session. So please feel free to ask questions wherever you have. So it need not be at the end, so that we'll have an engaging session. So today, in next 90 minutes, we are going to cover about GST appeals and the amnesty scheme. So it was a surprise for me that Jatin sir will cover this. That I was not aware, but briefly we'll cover that. But we'll mainly focus on GST appeals. So so these are the broad contents which we are going to cover in next 90 minutes. So one is GST appeals, like what is the overview, then what are the appealable orders and non-appealable orders. Basically the orders which can be appealed and those which can't be appealed. And the next step we'll go with the key provision. What are the appealable orders, which basically the orders against which we can file an appeal versus the non-appealable orders. And then we'll cover the key provisions in relation to filing appeals, and then we'll move on to the filing procedure and the practical consideration. Most importantly, probably this is the reason most of the professionals might have come here, which is how a professional should approach a GST order before filing an appeal. So that's what we are going to cover in point number 2. Just come down. And then broadly, is there any alternative to filing an appeal? That also will slightly touch upon. And then what are the next steps based on the order of the appellate authority? Then we'll briefly touch upon the amnesty scheme. Basically the overall, I think Jatin sir has already done most of the part here, but wherever it is relevant, I'll slightly touch upon that as well. So broadly, in the overview section, there are 3 parts. First is legislative framework. So GST appeals get covered under section 107 of the GST Act, and then the relevant rules are rule 108 and 109A. And what is the scope of appeals? So we can file an appeal against any order or a decision, but not a notice, basically. And then then the appeal, the basic condition before filing an appeal is whatever tax we are admitting, that has to be paid along with interest. Suppose if there is an order wherein there are 5 or 6 issues, and we intend to fight out the case for 4 issues and 2 issues we are okay with. So then with respect to those 2 issues, we should pay tax and interest as well, because that is a precondition to file an appeal. So I have seen cases wherein appeals get rejected if we don't pay tax along with interest for the admitted aspects. So wherever we have admitted, we have to pay tax along with interest. Then comes the pre-deposit requirement, which is with respect to the disputed aspects. Wherever we are not agreeing, so we have to pay a pre-deposit of 10% and up a maximum of 20 crores. Previously I think it was 20 crores and recently it is reduced. And most importantly, the appellate authority doesn't have a power to waive off the pre-deposit. So unlike old service tax cases before 2014, etc., so we used to file an application for appeal and we used to file an application for stay. I think a similar case is with the income tax as well. Whereas in GST, we do not have that luxury, so we have to pay 10% of pre-deposit before filing an appeal. And the corollary to that is no pre-deposit is required if it is with respect to, if the appeal we are going to file is with respect to penalty or interest. So obviously there is, if we see that first bullet, it says 10% of disputed tax. If there is no disputed tax, then there is no pre-deposit requirement as such. So if the disputed thing aspect is penalty or interest, or if the dispute is with respect to refund, so if we have filed a refund application which has been rejected or partly allowed and we want to go for an appeal, in that case also there arises no pre-deposit. Yeah, so quickly these are the various appealable orders, meaning those orders against which we can file an appeal, and these are the non-appealable orders. Appealable orders are typical orders which we see day in and day out, wherein there is a rejection or cancellation of registration when we file an application, and there is a rejection of refund claim, or the classic case of GST audit and then an assessment order out of it, and then tax or penalty orders. Or the other thing would be the GST detention orders. If the goods are caught on the road and then the e-way bill, because of the e-way bill issue, if there is a penalty or penalty is being imposed for discrepancy in the documents, so those orders also can be appealed. So, but practically, most of the taxpayers pay that penalty and move on. Whereas the appeal process they will do at the back end. But in a general scenario, if it is a normal case, GST audit happens, they will issue a notice and then they'll pass an order, and after that we'll decide whether to file an appeal. Whereas in case of when the goods are detained and they are on the road and those goods are to be delivered to their customers, then we don't have that luxury of time. Therefore, most of the clients, they pay, and if they think there is a merit to it, then they file an appeal later. So why this penalty has been charged? So ideally, say goods are detained saying there is a discrepancy of invoice number between the e-way bill and the invoice. So for the as minutest as that, so there is 112 invoice number, whereas in the e-way bill it is 11/2. So there are certain creative officers who can detain goods even for that kind of minor error also. So in those cases, we can, if the goods are to be released immediately, then the easiest or the prudent way is to pay it and then fight it out in appeal. And similarly, once the goods are detained, then the consequence of it in some cases would be confiscation if nobody is turning up with respect to those goods which are detained. And then the other kind of orders are the non-appealable orders, which are, so one is the transfer of proceedings order. So basically this is the admin related order which is given by the GST authorities amongst the officers. The other, if we see the other 2 points, the document seizure and retention. So as such, if we see these 2 cases, document seizure or retention, so there is a section, if I am not, section 65 or 66, which gives the power to the officer to do inspection, and during the inspection, if they have reason to believe, I think Nithin will cover that in the subsequent session, but if they have reason to believe, then they have been given power to seize our documents for a certain period. So that order we cannot challenge. We can't say, okay, how can you have reason to believe all that. We cannot challenge as of now, but I think there is a timeline of about 6 months. Till that time they can do this. But in principle we do not have an order. We do not have a mechanism to file an appeal against it. And the last one is with respect to orders under section 80. Basically there is a installment scheme kind of thing in the GST law which allows the GST officer to permit the taxpayer to pay tax in installments. So there that is his discretion. So we make an application saying our financial position is not good, so I can't pay tax against a particular order, and then the authority may permit the taxpayer to pay it in installments. Okay, so if they reject that application, then obviously we don't have any appeal mechanism for it, because this is a discretion given to the authority. Okay, so broadly these are the things: appealable orders and non-appealable orders. So if you have any questions, I'll take a pause and then we can discuss and move forward. So quickly, timelines for filing the appeal. So 3 months is the normal timeline, and 1 month extension is possible, and this 1 month power is given to the appellate authority. In most scenarios they do give. So but we have to be cautious of filing the appeal in the timeline of 3 months. And appeal beyond 4 months, 3 plus 1, which is 4 months, the appellate authority doesn't have an power to condone the delay beyond 4 months. But we'll come to some judgments which allowed it in the next slide. But this GST Act as such doesn't empower the appellate authority to condone the delay beyond 4 months. And then the other procedural aspects are maximum of 3 adjournments we get. Once we file an appeal, we get the hearing notice, etc. So we can get a maximum of 3 adjournments. And there is a interesting provision which says additional grounds. So we will file an appeal, and then we'll put the grounds of appeal. When the hearing comes, the law says that we cannot add additional grounds during the hearing other than those mentioned in the appeal. So you can add only if it is not willful or unreasonable. So this is something which we should be mindful of, but we can challenge this, but this is something which we should be mindful of. And the other provision is, I think this is the important thing, once the pre-deposit is paid, the balance demand should be stayed automatically. So once we pay 10% of the disputed demand, then 90% of the demand should be stayed, because the provision is there. But still, despite this provision, there are litigations on this. So wherein people, many taxpayers went up to high courts, asked to grant stay. Then the procedural aspects are, our appeal will be heard by Commissioner Appeals if the orders are passed by Joint Commissioner or Additional Commissioner designation, and if the orders are passed by AC or DC or Superintendent, depending upon the monetary value of the demand, it will be heard by Joint Commissioner Appeals. Okay. And then once we file an appeal, there is a hearing. We make our submissions during the hearing, etc. So what the appellate authority can do? He or she can confirm the order, the demand in the order, or they can modify also. Suppose if the demand is say 10 lakhs, and then they can reduce it to 8 lakhs, or they can confirm 10 lakhs. The other one is to strike off the demand of 10 lakhs, which is annul. The interesting provision, which is a deviation from the practice in the service tax era, is that they cannot remand back. They cannot send it back to the appellate authority saying, okay, I cannot look into, suppose if it's a 2A 3B issue, and there is another GST 1 e-waybill issue. So it is more clerical or more reconciliation work. So then most of the authorities may not be ready to look at it, because that is they think it is not my job to look at these reconciliations. So earlier in service tax regime, what used to happen is they used to simply remand back. That is the easiest job for them, so that the lower level officer, the adjudicating authority would look at it and then pass a fresh order. So now they can't do it, because the law clearly says we cannot remand back the case to the adjudicating authority. So therefore it makes in a way, it has increased the responsibility of the taxpayer also, because we have to ensure that the appellate authority understands it. So the problem more so is with respect to the state GST authorities, because making them understand, who have dealt with VAT so many years, making them understand the concept of supply, concept of service, all of it, and more so with respect to the reconciliation, all these issues, when this whole saga of 2A, 2B, all this is a never-ending story, it is going on. So making them understand, explain all this will be a difficult proposition. So if we fail, then so since the officer, appellate authority doesn't have the fourth option of remanding back, he will do either of these three. And out of those three, first one is easiest for them to just confirm. So therefore, we'll end up getting an unfavorable order at the appellate authority also, and then we'll have to pay one more pre-deposit before the tribunal. So, once we get an unfavorable order at the first level, so maybe we'll have to put more efforts to make the appellate authority understand, so that it gets dropped or at least modified at that level. And so the other procedural aspects are, we have to file an appeal in APL 01, which is electronic, on the GST portal, and some cases it is manually allowed, but predominantly it is electronic. So once we file an appeal, we'll get a provisional acknowledgement immediately upon filing the appeal. And after filing the appeal, and mind you, there is no requirement to file any hard copy of the appeal. So once we file, most of the state GST and central GST officers are following this. So once we file our appeal online, at least there is no requirement to file a hard copy of it. So we'll get a provisional acknowledgement, and after the officer verifying whether we have filed on time, whether we have paid pre-deposit, after verifying all that, they will give a final acknowledgement with the appeal number, saying so and so appeal number, etc. Then and the other thing is, this pre-deposit has to be paid through the form only. In the APL 01 form only, there is an integration to the credit ledger or cash ledger, so that we'll have to file through that. If we pay through DRC 03, I think Jatin sir was also mentioning, so there are instances of appeal rejection as well. So these days it is more frequent, but in the initial days they are accepting even if we pay through DRC 03. But now it is not happening, I guess. And the other thing is, the hearings are online. Recent, there is a clarification by the central CBIC that all hearings should be online unless the taxpayer asks for a physical hearing. So in a way it is useful for the taxpayer. So we are not. So again, it is only CGST. Therefore, SGST, it's their own discretion. I think SGST everybody is doing offline mostly. And the other procedural thing is, earlier there was a requirement to file a physical copy of the order, which is certified, self-certified copy of the order physically. Now that is not required. So recently there has been an amendment, I think in 22 or 21 or 22. And so, yeah, so we'll discuss some of the practical aspects. So we discussed that pre-deposit has to be paid, which is 10% of disputed amount, whether it has to be paid through cash or ITC. So as such, there is no clear restriction to pay the pre-deposit through ITC in the GST law. So there has been an interpretation that we have to pay through only cash. So Bihar High Court in case of Flipkart Internet has mandated that, like interpreted in such a way that it has to be, pre-deposit has to be paid in cash. So they went to Supreme Court and Supreme Court has stayed. As of now there is no decision yet. But on ground, most of the authorities are accepting pre-deposit in ITC. If you pay through credit ledger, they do accept. And I think 2 days back only there is a Madras High Court judgment. They also confirmed the same thing. Pre-deposit can be paid through ITC. So I think 22nd of November this judgment was. So predominantly we can pay, like net, the point is we can pay through ITC while there is a confusion or there is a controversy on it. And the next aspect is, okay, the timeline to file appeal is 3 + 1, 4 months. Can that be condoned? So as we discussed, the appellate authority doesn't have power to condone the delay beyond 4 months. But the natural recourse would be taxpayers, based on their advocate's advice, most likely will go to high courts and see is there any writ jurisdiction which can be explored. So these are some of the cases. There are, I think, n number of cases wherein the delay beyond 4 months also is condoned. So if you see, in one case Madras High Court has said that hearing was not given before passing an order, therefore you condone the delay even if it is beyond 4 months. Then there is one funny reason at the bottom. Delay, if there is a delay by the accountant or auditor also, Kolkata High Court has allowed. So again, it depends on facts and circumstances. And there is another Kolkata High Court judgment which said that appellate authority also can condone the delay. That's what the interpretation which the Kolkata High Court has taken. So beyond 4 months also you have power. That's what Kolkata High Court has said. But this is one of case. But predominantly in all other cases, the condonation of delay was allowed only on a case-to-case basis, depending upon the reasons, which is no hearing has been given or no proper time was given, like say only one time hearing was given, or that time the taxpayer was not well or accountant is not well, etc., etc. So we can explore this option. Like this could be the last option if you don't file appeal within 4 months. And waiver of pre-deposit. These are the like 3 things. One is whether I should pay ITC through ITC or condonation of delay of beyond 4 months, and waiver of pre-deposit. These are the practical challenges in most cases. High courts, high courts have not allowed waiver of pre-deposit as such because the law clearly says you have to pay 10%, so no matter what. So therefore, only in certain technical cases, like so in one case, it was allowed because their bank accounts were frozen. So therefore, they can't pay pre-deposit. They don't have ITC, and they have to pay through cash. To pay through cash, their bank accounts were frozen. So therefore, that is waived off. That is one case, and then there is another case wherein I think this is not an exception per se, since they have paid deposit 100% of the tax disputed amount while challenging through the appeal. So in that case, pre-deposit requirement was waived off. As such, this was not a relaxation. The first one is the technical relaxation. Net, even high courts are also not entertaining waiver of pre-deposit. So therefore, the taxpayers and we as CS, we have to ensure and try that the issue gets started at the first level only, because it will have a suppose if there is an order of say 5 crores demand, then we will have to pay a pre-deposit of 10%. So nowadays the tax officers are working towards collection of the 10% because their target is not the 100%, 5 crores. So their target is 50 lakhs. Okay, to get the 50 lakhs this month, what should I do? So therefore, I'll pass a order, which whether it is right or wrong, we'll see later. So now, how a chartered accountant or a tax consultant should approach an appeal? That's what we'll discuss here. So in most scenarios, what happens is, as Jatin sir was also mentioning, so whenever the order or notice comes, the client sit on it and they will forward it to us on the last minute, and they will say, okay, you file it, sir. And we with the less time, so we will try to file appeal, we'll try to catch that bus of timeline, which is 3 months or 4 months, and then we'll somehow try to file an appeal. in most of the times we may miss on some of the grounds which have to be taken in the appeal. So some of the like the basic things like a DRC 01A should be issued, which is the pre-show cause notice should be issued before issuing a show cause notice. So whether it has been issued or not is something which we'll have to look at. If it is not issued, then that can be a ground of appeal. Then again, if the order is on account of GST audit, then whether it has been completed in 3 months. So from the date, again, funnily, interestingly, 3 months will be calculated from the date when we give the last information. Suppose if the audit has been initiated for, say, now we have 2021, it is happening now. So it has been initiated in, say, January 2024. Then the law says within 3 months it has to be completed. So how the officers will come out of it is that the 3 months will be completed from the date when we give the last information. So first the officer, what they will do is first they will initiate in January 24. They will issue a notice, they will say 1, 2, 3, 4, 5, balance sheet, trial balance, that, this, all that. Like they will have a 20 pointer information list. Then after 1 month or 2 months, then we will give information, and then they will come up with something else. So in a way they will try to circumvent this, because 3 months is from the date we give last information. So but nevertheless we will have to examine if it is completed within 3 months from when we have completed, meaning when the ADT the initial observations are issued. Like there will be 2 things. One is initial observations, and then based on a response to the initial observations, they will issue something called as ADT 02. So initial observations they have to issue within 3 months of we submitting the last information. So that is something. These are the two, like these are interlinked. These 2 things we'll have to check. While this is admin, but if this is not met, then this is easy to kind of counter. Instead of getting into the merits, we have case law, we have circular, all that. So instead of relying on that, this could be an easier way to challenge. Then the other thing is the basic thing of DIN, whether DIN is there or not. If it is CGST department, then DIN is mandatory in the order, or even in the SCN also. And again, monetary limits. So different GST authorities or the proper officers have different powers to issue show cause notice. Suppose a superintendent or AC or DC can issue a show cause notice up to a certain limit of 50 lakhs 1 crore, whereas a joint commissioner, additional commissioner can issue a show cause notice for a different monetary limit. So there is a circular for it. We'll have to see if it has been complied with or not. If not, then that could be a ground of appeal again. Then the other thing is whether the order has been travelled beyond SCN. So in some cases what happens is they issue show cause notice on 1 to let's say 3 issues, and then while passing an order they'll include a 4th issue also and pass an order. So that means they did not let me know against which issue they are asking me to pay tax. So that 4th issue basically is that the order has went beyond the show cause notice. So you should let me know before passing an order about what are your grievances are. So if they pass an order on an issue which was not mentioned in the show cause notice, that is a sure shot ground for this is happening from ages, even service tax regime also. This used to happen. They mention something in show cause notice and they'll pass on something else in the order. I have a classic case wherein a show cause notice has been issued under 73, but order has been passed under 74. So that hearing has not come yet, but we have to see. But this is one of the ground we have taken. So any questions or any comments?
DRC 01A is not mandatory from 2022, I think, because they changed the shall into may.
Yes. Yeah, for the period before that is something which we can explain.
That is one point and the other thing is I don't think whether the late issuance of ADT2 can be a ground in appeal, even because 73 or 74 are independent section. Even if they belatedly issue that ADT2 also, still they may send the report to the jurisdiction officer. So without stating that the ADT2, they can simply issue the data collected in the ADT2. They issue a 73 notice independently. So these two things I observe. I think it is different from the opinion.
No, so basically ADT2 thing is that like if they refer ADT2 in the show cause notice and if that ADT2 is not within the timelines, then we can challenge that, because your basis of a document which is not issued in, suppose if they don't give any reference, then I think we can take that position. If they give a reference, okay, we have done audit, ADT01, this is my ADT01 I have issued on so and so date, and I have done the audit, I have come to you, all that. But typically in show cause notice, they will have the reference of all this history. If they issue a show cause notice based on an audit, which is not done as per the provisions, then we can, my view is that we can challenge it. If it is independent of it, suppose if it is a industry specific issue, suppose somebody is doing intermediary service, so therefore they, without doing based on some information intelligence or some online gaming, all that, they will issue a show cause notice. In that case, they may not refer to any ADT1 or 2, because that's their source of information there is a different thing. So there these timelines may not apply. But if it is arising out of ADT audit, my view is that it can still be challenged.
You can challenge, but what can be the relief we can expect? Because you only by referring ADT2 is issued after time limit, it doesn't appear that, but the SCN is the show cause notice. From that only the order is passing down. In that case, even if you may say it is wrong, the appellate authority also may accept it is wrong. Still, whether it can nullify the order under section 73 or 74?
No as such, but this could be one ground which we can take. As such, this alone cannot help us come out of it. These all things will add up in defending our case.
Yes, thank you.
Yeah. So then, the other point is the order timelines. So as you know, so the order has to be, if it is 73, 74, there is big, there is a big table only of timelines for 73, 74 for different years. So whether that has been complied with or not is something which you have to see. Then this, again, if it is a 74 order, whether the order simply says there is a fraud allegation, fraud, willful misstatement, all of it, or if there is any concrete evidence or anything, any explanation which is given in the order is something which you have to see. Because in 74, it is on the, unlike in say the PMLA, Money Laundering Act, etc., they'll assume that there is a fraud or there is a fraud. Basically, they'll assume the mens rea. You have the guilty mind. That's what they assume in laws like PMLA. Whereas in section 74 here in the GST law, they have to prove that there is a willful misstatement, fraud, etc., based on the documents, based on the circumstances. Suppose if they find out something from the return which I have already filed, so as Jatin sir also mentioned some time ago, if it is basically from the documents you are finding something, as such you are not finding any fraud. So that at best can be a misstatement or a mistake. So you can't attribute that to a fraud. So then you may have to, then we can make a submission to convert that into 73 instead of 74. Then extension of it is whether the order are simply confirmed show cause notice, or is there any discussion on to various allegations which have been mentioned in the show cause notice. basically if it is not a reasoned order, then we can mention that as a ground in the appeal, and then there another thing could be we can explore filing a writ petition, which in the high profile cases they do, all this online gaming, name it, whatever has happened in last 3-4 years. So they go to High Court based on, one of the grounds is this, it is not a reasoned order, they simply confirmed it. The show cause notice itself is not, there is no basis. So most of the cases they went against the show cause notice. And then the basic things like arithmetic errors, whether there are any, we can have to look. Then whether personal hearing was granted, then whether reply has been considered, etc. So most of the times they don't look at the reply also, and then they simply confirm it. Then the other thing is if it is there is a parallel proceeding, say by CGST and SGST, or maybe within SGST only there are two wings, one is investigation wing and then the adjudication wing. If there are any parallel proceedings which are happening, then we'll have to the other option which could be explored, while we can take that ground here in the appeal, the other option could be to file a writ petition. Yeah, so and then while drafting the bill, so wherever there are relevant circulars or judgments on a particular aspects which is relevant to us, so we should quote all those things because that is binding on them. Suppose if it is a circular, then definitely binding on them. If it is a jurisdictional High Court judgment, if it is say Madras High Court judgment, it should be applicable for Tamil Nadu, whether it is CGST or SGST. That aspect we should be mindful of, and we should quote all of it. And with respect to evidence certification, like submission, so wherever there are reconciliation issue, or if it is a say classification issue, if it is a reconciliation issue, then obviously we should submit a CA certificate along with the reconciliation. It may be a different CA than who is appearing for the hearing. That way that will have some independence. And then suppose if it is a classification issue, GST classification issue, and it is more a technical subject. Suppose if it is an engineering product, these are the features of that product, etc. While we may say it, we may not be the technical, like the taxpayer may not be the technical expert. In that case, they may get a chartered engineer certificate about those technical parameters in support of the classification, if it is a classification dispute. Then, and then the next thing is minutes of the GST Council. If suppose more often than not, like many times there have been rate changes in last 7 years. So every GST Council meeting, whenever there has been a rate change, there will be a discussion. So if something is not clear from the notification or the circular with respect to the rate change, etc., we can refer back to the council meeting minutes to understand if whether that is supporting our view, whatever we have taken for the client. So that can help while drafting. We can rely on that as well. While it may not have a legal value, but at least it will have a persuasive value. Then interest rate, whether it is 18% or 24% is something which we have to see. Earlier there was a distinction if it is output. If it is output, delayed payment of output tax, it was 18%, and with respect to ITC excess availment, it was 28%. But later it has been amended to say to make it uniform. So what is applicable today with respect to ITC are output tax non-payment, excess availment of ITC or non-payment of output tax. The interest rate applicable is 18%. So we'll have to see whether it is if it is properly mentioned or not. And there are other two, 6% and 9%, that is more with respect to refund. If there is a delayed refund, what is relevant here is 9%. If we file an appeal and we get a favorable order, then that pre-deposit has to be paid back to us within 3 months. If they don't pay, we can ask 9% of interest. So that is that 9%, and 6% is with respect to normal refunds on account of export of goods or services. And the other thing which we have to be mindful of is if it is a ITC related issue, if it is only availed but not utilized, it has to be, so there should not be any interest if it is only availed but not utilized. So we can challenge that if there is a issue with respect to that. So that means to say, suppose if there is a 2A 3B issue, we have taken excess credit and that credit is lying in your credit ledger even today. So in that case, we will say if we are okay with, if we say that we have availed excess, then we can reverse that from the credit ledger without interest because it is only availed, we never utilized. So broadly these are the appeal provisions, and the other alternative is to GST appeals is rectification under section 161. So again, this is like a very, what do you call it, the applicability of it is very in only certain scenarios, because the words which are used is the GST authority may rectify errors apparent on record. So which is more clerical errors, more to do with the clerical errors. Suppose if they have put a different number, instead of 1 lakh they have mentioned 10 lakhs, or if they have not taken on record some documents even though we have submitted those documents. So most likely what happens is they will say, okay, you have asked for the CS certificate in support of this reconciliation, you never submitted it. That could be, that will come out in the order. They might not have asked only, but that will come out in the order. So in those cases we can move a rectification application. Again, it's a discretion. So if there is an error to that is for point number 1, we can file a rectification application, and if then once you file the rectification application, that is the discretion of the authority whether to allow that rectification or not. So for allowing that rectification, they have 3 months of time. Suppose the order is passed today, then so we have 2 options. One is the appeal, the procedure has been discussed some time ago. The other option could be rectification if it is more towards the if it is fitting into this word, basically errors apparent on record. So so this can be used only when there is a error and or if they ignore the information which we have given already. So now, so assume we have filed, the order has been passed, we have filed an appeal with the, by taking all the grounds of appeal which we have discussed some time ago. Okay, before getting into any other questions on that.
I need to add 2 points.
Yes, please.
The thing is, as you said, they have 3 months for rectification. The time is the appeal for also 3 months.
Yes.
There is no mandate in law. If we file rectification, the time limit for appeal will get extended.
Yes.
So as you rightly said, it is our discretion of the officer to entertain the rectification or not.
Correct.
So if they reject it, we may leave remediless, because in that time the condemnation period also may complete. So for the safer side, even though we going to file a rectification, we first file an appeal, then we may file a rectification. Means even though if the rectification got rejected, the ground can be challenged in appeal also. Because if they rejected rectification order, means the appeal can only go for against whether the rectification is right or wrong.
Okay.
That is I like to add.
Yeah. Thank you. No, so basically when, as you said, they have 3 months to take an action on this. No, we can file an rectification application within 3 months. So assume we file in say first 1 week or 10 days only. So
I mean, because most of the cases what happens means sometimes the client come in the last minute. They will say, sir, the officer has to file rectification. So in that scenario, if we simply file rectification, means
Then yeah, we'll lose out this because there is no there is something called as doctrine of merger, which says that okay, if we file rectification application, so then that 3 months will be counted from the date when it is rejected. That provision is not there. So in most cases, in some of the cases, what the taxpayers are doing, they are approaching high courts saying we have filed a rectification application, it is rejected. So now we don't have an option to file appeal also. Therefore, you help us so that we will file an appeal. So there are cases wherein high courts have said, okay, since the rectification has been rejected, you allow them to file an appeal within so and so date, like 1 week, 10 days, 2 weeks. Yeah. But yeah, prudent way would be to file the rectification application immediately. That may not be possible in most cases. We can file appeal and parallelly the rectification petition, but the authorities may not ask.
You must state in the statement of facts. We have also filed the rectification petition
to be on to just avoid misstating.
Exactly.
As such, there is no restriction to pursue the parallel options.
Remedies.
Yeah, thank you. So once the order is passed, then one is first possibility is it is favorable, then we are good, happy ending. If the order is not favorable, then we have 3 options. One is file an appeal to the appellate tribunal, which is not formed yet. So till July 30, 2024, we had a luxury of not paying pre-deposit, even though we intend to go for go ahead and file an appeal before tribunal. So till July 2024, what used to happen is that okay, if I did not get a favorable order at the first appellate level, so then I will decide. At best, what may happen is the authorities may say, okay, you did not get favorable order, pay. So then we used to file a intimation saying we intend to file a tribunal is not found, what should we do? Now probably because of the collection pressure or whatever, they have come up with a circular in 2024 July, which says that if you intend to go and file an appeal before tribunal, you pay additional 10% pre-deposit now. And as and when the tribunal forms, we will adjust then. So therefore, we'll have to shell out one more 10% based on the outcome of the, if it is not favorable, you have to pay one more 10% and wait for the tribunal to get formed. So then the circular also says that if you don't pay, the recovery proceedings will get initiated, like triggered. So they can come and attach the bank account also. While we can challenge all that in court, that is a different aspect, but the immediate impact would be they may initiate recovery proceedings. And the second option is second option would be rectification application under 16(5), so which Jatin sir was mentioning. If it is the ITC issue, the ITC was not allowed on time, not availed on time for the first 4 years, and then and that issue is mentioned, is one of the issue in the order which has been confirmed. So then we can file a rectification application for that, saying okay, you for the ITC issue alone, I am filing the rectification application, please drop this. The other option is the amnesty scheme, which has been discussed, 128A. Pay tax and get waiver of interest and penalty. So Jatin sir has covered this, but I will quickly touch upon whatever if something is missed from it. So this is applicable for the first 3 years, whether it is a notice, whether there is a notice or whether there is an order, or 74 is converted into 73 order. So those 3 scenarios it gets covered. What is not covered is 74 case. And if there is a interest on account of erroneous refund, meaning if there is a refund which has been given to us, say there is an export of service, you have filed a refund application, and then initially there was, it is not mandatory to get the export proceeds with respect to goods, if it is export of goods, we can file an application for refund. Then you will subject to documentation, they will give the refund. It is not mandatory to get the forex for export of goods. Initially, I think till 2020 or so, till April 2020, it is not mandatory for export of goods to get foreign currency to be eligible for refund. So in that case, after that, from April 20 onwards, it has been mandatory for that also. If you are going for refund for export of goods, you will have to ensure that forex for that goods also has come to your bank account within 9 months, which is in the FEMA. If it has not come, so then normally what happens is, if the refund application say is for May 2020, we have filed the application, we have got refund, but this rule is there implemented from April 20. Since the FEMA allows 9 months, then our ground would be, sir, why are you asking me to give forex that I have received the forex proof now in May 2020? Give me these exports have been made only in May 2020. I have time till end of the year, which is 9 months. So why are you asking me now? So therefore, that could be a ground. They might have processed the refund for whatever reason. So in January 2021, say that has turned out into a bad debt, 100% has not come. So therefore, Rule 96B says that you have to get forex even for export of goods. So if you don't get, you have to repay the interest. So assume that is the scenario, and there is an order for it. So okay, you pay refund along with interest since you have not received the forex. So that interest will not get covered here. So that is what which is mentioned for bullet number 1 in the second section. And time frame we have discussed till March 2025 you have to pay. Then there are these two forms, SPL 1, 2. One is with respect to if the notice is there and notice order has not been passed, then we have to use this form to file. Then we have to pay through, if it is SPL, if it is against the notice we are paying, we have to pay DRC 3 only. Whereas if it is against order, because once the order is generated, then there is a liability which gets generated in the electronic liability ledger. So then we'll have to pay via debit to that. Like we have to go there and pay through that instead of DRC 03 in case of if you are using this amnesty scheme against an order. So then once we file an application, then two possibilities: they may accept it, which is in SPL 05, or they may reject in SPL 07. Before that there is a notice also, show cause notice they may issue. Then the thing is deemed approval if no action is taken within 3 months. This is something which we have to watch out for. Then against the rejection we can file an appeal, which was discussed. And if against the rejection of the amnesty scheme, if we file an appeal and the appeal is also, the appellate authority also says that no, you are not eligible for this, then the appeal, like to just take a back step, first thing is, in order to opt for this scheme, we should withdraw an appeal which is already filed, then only you opt for the scheme, then all this will happen. Then assuming it gets rejected, then we have an option to file an appeal against that rejection. If the appellate authority confirms that rejection, then the original appeal will be reinstated. So therefore it makes all sense to file an appeal today, because for those cases where an order has been passed today and we cannot opt for this scheme today because SPL 1 is not there. So therefore it's by implication we have to file an appeal today, wait till March 25, then you file, if at all that is relevant, making sense, all that, then we have to file SPL 01 by withdrawing the appeal. So therefore in the interim period from today till March 25, there is no safeguard to us which will stop, like there is no provision in the law which stops the authority to initiate recovery proceeding. So they'll say you have not filed appeal, so I can initiate the recovery proceeding. So therefore, wherever order has been passed, and then whether we go for this scheme or not, we have to file appeal without waiting for this scheme to go live in January whenever that forms. Some of the clarifications are if it is a multiple periods involved, then it is applicable only for, it may not be relevant, but there are, usually the authorities issue order notice for year wise, so if there are, like say, if it is for 5 years together, then this may be applicable. The clarification says that if multiple periods are there in an order or notice, it is applicable only for these first 3 years. If there are multiple issues, there are 5 issues, and then we are okay with the paying tax on 3 issues. With respect to 2 issues, we are not okay. Then we cannot apply selectively. So basically, it is one-sided. So we'll have to pay tax under this scheme for all the issues. So if you want to opt, then disputed interest and penalty, where basically wherever tax and interest has been paid already, then we will not get any relief. So basically no what as Jatin said, there is no equity. So if you are a genuine taxpayer, paid already the interest and penalty, you will not get any relief. This is that point which we have discussed some time ago. So we have to file an appeal without waiting for that SPL 02 form, because the authorities may initiate recovery. So if ultimately if we decide to opt for this scheme, then we can withdraw the appeal. If you don't want to opt for this scheme, we can continue the appeal. So finally, these are. Yeah, so the other first point, that refund we cannot get if we have paid already. Then the other point is limited immunity. Even if we say yes, okay, we'll pay tax which is issued in the order, etc., etc. Then tomorrow if the GST department goes to an appeal, and then unfortunately we don't get that order in our favor, while we get an opportunity to make our submissions, even if the GST department goes to an appeal. If that order doesn't get in favor of us, then the additional tax, whatever comes out of that order, so suppose if there is a tax demand of 10 lakhs and then we said, okay, fine, we'll pay it, then we have opted for this form, etc., etc. But after some time, the GST authority filed an appeal saying, no, it's not 10 lakhs, it should have been 15 lakhs. So then the appellate authority also confirms it. Then we don't have any other option except to pay. We cannot challenge that addition of 5 lakhs. So that has to be paid as and when that order comes, like within 3 months from the date of the order which demands for the additional tax. I think that's about it. If you have any questions, I think we have 40 minutes more. If you have any questions, we can quickly discuss. Yes.
In most of the cases, the party has absconded without filing the GSTR 1. They filed half of it, another file they have not. So by this time, they vanish. And we go for the department wants written statement from the person. They say they will file it, or they have filed it GSR 1, or they will file it. and there is no such thing coming in that we are going for the appeal for the 1718 or 1819, if I remember correctly. So what will happen if you go for the amnesty scheme? We have to pay the tax for the default what they have committed in not filing GSTR 1.
Yeah. Yes, sir. So the GST law, which as it stands today, it places responsibility on the supplier to collect the tax and pay it to the. No, there are two things. One is if we avail input tax credit and we pay the tax to the vendor, and the vendor absconds. The section 16.3, I think section 16.3 says that you have to avail credit. There are 5-6 conditions. One of it is that your vendor has to pay tax to the government in order you to be eligible for availing credit. If your vendor has not paid, he is absconding, then you are supposed to reverse the credit which has been paid, which has been availed along with interest. So the law as it stands today, that's what it says. Then there are judgments, etc. in the service tax regime, VAT regime, which says you cannot penalize me for default of my vendor. Even in the GST law also, that was the principle in the pre-GST regime, which says that you cannot, if my vendor doesn't pay tax, you don't penalize me, etc. There is Arise India judgment, Delhi High Court, and there are multiple judgments which says I cannot be penalized if my vendor don't pay tax. Similar thing has happened in GST also. A lot of absconding vendors are there, and right now it is pending in the courts. No decision has come on this yet.
Number 2. But now for GSTR 9, the notices are coming for GSTR 1 from online, GSTR 3B, again GSTR 9 and GSTR 9C. For 2021 GSTR 9C, people have filed belatedly or they are filing now, and they have the time to question the GSTR for 1718 or 1819, 1920, the GSTR 9 or 9C. After 31st March 25, if they file the they show cause notice and they pass the order, then what happens to this scheme?
Okay, no, the year involved is what, sir? 1718.
9C, see, they have the, I think the department has got the time to go for show cause notice can be issued even within 3 years from the date of filing any return.
Annual return.
The latest time given
so
is
now for 2021 it will expire in,
I don't know.
2021 they have to issue by end of this month. For 2021.
2021 GSTR 9C, some people have not filed. Let's say they are filing now. The department has got the time to look into that and cross-examine and see that the notice is issued after March 25. But now it is 17, 18, 18, 19 and
1920 also time over.
1920 GSTR 9C not filed, now they are filing it.
No, if they file now, so normally the due date is, the PS is calculated from the actual due date, whether you file it or not, that is the time from which they have to, it will start. So the vendor has
not from the due date. I think that
3 years from the due date
on which you filed, they have see, either 3 years from the due date for filing or
the extended date.
Like there must be some sort of relaxation for department for your delay.
There are maybe somebody can correct me if I'm wrong. So the timeline is calculated from the due date of annual return or the extended date. So which has happened for the first 2-3 years multiple times. So and if the return has not been filed, just because suppose that return is filed today, they cannot compute that 3 years from today. So that's what the provisions are.
Any old matter, whether the department now having brought the scheme says wherever the order is passed,
correct,
interest and can be waived. That's the only thing they have put.
Correct, interest and
where they have not passed order, after March 25, if they pass the order, is it valid? That is one. And again you mentioned about multiple issues cannot be handled here, but actually multiple issues are coming. That is GSTR 1 query comes from one person, 3B comes from another person, and 9 comes from another person, 9C comes from another person, and apart from that, there is somebody is coming forward, coming for the raid or something like that, covering for 6 years. So you mentioned about multiple issues cannot be handled.
Oh, okay. No. What I meant is, in a show cause notice or order, there are say 10 points which are being raised. So then, if you want to opt for the scheme, for all the 10 points you have to opt for. So we can't opt selectively. So this has happened in the previous. This was the facility which was available in the previous amnesty scheme, Sabka Vishwas scheme, which was there in 2019 or so, for the service tax cases, where we were allowed to opt the amnesty scheme selectively for those whatever issues we feel, whatever issues we want. Whereas here, that facility is not there. We have to pay tax for all issues, or we don't want to pay and go file appeal. So that's the thing. Hope I answered your question.
Right.
I like to add a point for the 2A3B issue. In case the supplier has absconded, we can raise a point that as per section 76, there is no time limit in section 76. In that it is say, if a person collected a tax, money from a customer in the name of tax, it should be deposited to the government, and the government, there is no time limit for the government to action initiate against such a person. So they have a remedy for their thing. And the government has already stated in that their press release dated 4th May 2018 that the 16(2)(c) reversal is not automatic. So if what we are doing now is, whenever they are saying that supplier specific the 16(2)(c) issue, we first raise the question that whether you made a recovery under from that person under section 76. Otherwise, and you didn't say that it is unrecoverable, and you didn't give any evidence, because show cause notice is a revenues case. He said that, so without going into the proving my innocence, I can ask that whether you can recover from that person. Otherwise, even if subsequently recover from that person also, he asked me to reverse me also, it will be resulting in double demand, which is not allowed in law. So for you said that the 62 matter is already before the Supreme Court, but until that, if we need to defend the case, we need to pull that person who landed us into mess, so that we can survive until the final outcome comes from the Supreme Court.
Yeah, in fact, I think there is a Madras High Court judgment only which says
DY lethal enterprise, but it doesn't specifically speak about section 76. It is the judge say only the logic. It doesn't speak about section 76 and all. But he simply stated that based upon the logic. But still, and there is these points are not mine. It is said by the Jatin Christopher sir, and in national conference, Roy Chandania, advocate from Bombay, also added another point. In civil court procedure, there is a thing that when you file a case, add all the relevant person into the respondent. So he is also that person. He is the only didn't pay the tax. Then he should also add into respondent, so that we can save ourselves. Thank you.
Correct, valid point. Okay, so anything else? Okay, thank you for your time.
Good evening. We welcome Nithin Hebbar sir to occupy dais. It's my pleasure to introduce Nithin Hebbar as a practicing chartered accountant and a commerce graduate from Bangalore University. His started his independent practice in 2021, before which he was associated with a Big Four consulting firm in the indirect tax practice as manager for over 7 years. During his tenure at Big Four consulting firm, Nithin was also deputed for assisting companies in the GCC in implementing VAT during 2018, carrying forward the experience earned during GST implementation in India. Nithin represents trade before the departmental bodies and judicial forum of CSTAT. Thank you, sir. I request Deepak Ray, sir, to present shawl and memento to our speaker.
Thank you, SIRC, for providing me with this opportunity to present this topic today of inspection, search and seizure under GST. I hope you all have recharged your batteries for this tea break, because we have an interesting session ahead of us. We have come a very long way since the introduction of GST in July 17. It has been little over 7 years as on today since the GST law was implemented. In my personal experience, the initial 3 years were all about getting accustomed to the procedures, provisions, and from the adapting to the change from manufacture, service, sale to supply. Also dealing with the numerous challenges in the portal and the ever-incoming amendments to the law. The next part has been more about handling notices, orders, which the department authorities have been issuing in bulk for the initial years of GST. We have even reached a stage, the GST law has matured, we can say, where because it has reached a stage where the government has also offered amnesty scheme to the taxpayers. Amnesty scheme, we all know, is when the government wants to bring down the number of disputes or outstanding disputes between the taxpayers and the government, and also in sometimes to offer a form of relief to the assessees. So which we have covered in our just bygone sessions by Jatin sir and also by Pradeep. Now we move on to the topic for our today's discussion, which is inspection, search and seizure under GST. These provisions provide various powers to the officers, which are basically in the nature of curtailing the personal liberty of the persons. So inspection, search and seizure is something where they can come into your premises and carry out execute some powers. So it's very essential that every taxpayer and even their consultants are aware about their rights and duties, which the very provision which provides the powers, there is also some safeguards provided. So it's essential we know that. So in such cases when the department authorities initiate these actions, we know how to handle and defend these cases. So chapter 14 of the GST law provides the provisions in relation to search, seizure, inspection and arrest. These are the powers available to officers under chapter 14 of the GST law. It covers 6 sections. Starting from 67, it goes up to 72. 67 is the provision which provides the officers the power in relation to search, inspection and seizure, and this will be the focus of our today's discussion. This section 67 in itself, it's a very comprehensive code. It has 12 subsections, it has few provisos and few clauses in that. After 67 comes section 68, which is in relation to inspection of goods in movement. The usual issues what we see about intercepting conveyances for non-availability of e-way bill, all that comes under 68. Then there is 69, which provides the powers of arrest to the GST officers in specific instances. We'll briefly touch upon that in one of the topics. Then section 70 covers provides the power of summons given to officers for summoning a person to give evidence and produce documents. The title of the chapter says inspection, search, seizure and arrest only. But included within that is also the power to summon. Then lastly 71 and 72 speak about access to business premises available to the officers, and 72 about who are the officers other than GST officers who will be assisting these people in implementing the provisions of the Act. So, the powers given to officers under this section are very wide. What they can do, what they cannot do, all these things. But surprisingly, none of these terms, what is inspection, search or seizure, has been defined under the GST law. So in such instances, we go to the law lexicon, which is the vocabulary, or we can say dictionary on law terms. So inspect in legal terms means to look, to view or oversee. Why do we look, see or oversee? For the purpose of examination only, and it can be extended up to discovering and correcting errors. So in summary, we can say inspection means looking at a thing in detail or closely, that is examine, and for a purpose, which is discovering and correcting errors. Search. Search is an examination of a man's house, premises, or even his person. They can do a personal search also, for the purposes of discovering proof of guilt in relation to a crime or misdemeanor in which he is accused of. So error under inspection versus crime under search. Seizure. Seizure is simply stated, it's a one-line statement. Seizure is simply defined as taking the possession of property by an officer under legal process. So any person taking your property is not seizure. Any officer taking your property is not seizure. Only when an officer takes your property under a legal process, it qualifies as seizure. So this inspection, search and seizure, where do you draw the line between each of this activity? This has always been a matter of debate under the law. Various high courts have interpreted this, Supreme Court has interpreted it under SIRC laws, income tax, all those things. But the Madras High Court under the earlier sales tax regime has beautifully defined each of it in the case of Ram Kishan Sri Kishan Javeri, where it has opined that inspection can go only up to examination. It can't travel beyond that when you are carrying out an inspection. Search presupposes that something is secreted or concealed. So search can be carried out only when something is concealed or secreted or hidden. Seizure involves taking possession against the will of the owner. No one will voluntarily come and give this property to the government to take hold of it. So when it is being done against the will of the owner of the property, it takes the character of a seizure. With this, let's see what inspection under the provisions of section 67 of the GST law is. Subsection 1 deals with inspection. So who may conduct an inspection? Who is authorized to conduct an inspection? A proper officer not below the rank of joint commissioner through any GST officer by giving him an authorization in writing in form GST INS 01 can conduct an inspection. Proper officer, as we all know, it has been given under section 5 of the GST law, read with circular 3 of 17. And for the purpose of section 67(1), the proper officer is either an additional commissioner or a joint commissioner, no one below them. He has to issue an authorization in form GST INS 01 to any GST officer. It can be superintendent, it can be inspector, AC, DC. He can give an authorization to go conduct a search. But he cannot do it himself because the provision clearly says a proper officer by giving an authorization through any GST officer. So he cannot carry upon the inspection himself. What can be inspected? Any place of business of a taxable person, a transporter of goods, a owner or even an operator of warehouse, and any other place. So taxable person, who is a taxable person? Can the department go and conduct an inspection just because a person has not obtained registration under GST, even though he is continuing to evade tax, not pay tax, whatever it is? So taxable person is defined under 2108 of the Act to say it includes any person who has obtained registration under the GST law, and it also includes any person who is liable to obtain registration under the GST law, he is also a taxable person. Liable to obtain registration comes from section 22 and 24. So, he is liable to registration but not registered, he is also a taxable person. So, he can also be inspected. And they say at the last, if you see any other place, what is any other place? We understand place of business of taxable person, transporter of goods, owner warehouse of goods. What is any other place? Very wide powers, but we will discuss it subsequently. Next, when can inspection be conducted? When the proper officer, again officer of the rank of Joint Commissioner or above, has the reason to believe that, then it lists 4 instances, that the taxable person has suppressed any transaction with an intent to evade tax. Coupled, it's a dual condition. There should be a suppression of transaction and there should also be an intent to evade tax in that. There should be mens rea. Intent to evade tax is mens rea. So, what are the reasons to believe in relation to? It should be relating to suppression of transaction on supply of goods or services. Say, you have made a supply of say 100. They have a reason to believe. For whatever reasons, maybe your e-way bill, maybe your customer data. They have reasons to believe that you have made a sale for 100. But you have reported and paid tax only on 80 in your returns. And there have been no amendments, no changes, nothing. Suppression of transaction of goods. Suppression of stock of goods in hand. Again, officer has reason to believe your premises has say X plus Y amount of goods. But your books say only X amount of goods. Suppression of stock in goods. Or claimed ITC in excess of his entitlement. Claiming ITC to GST are 3B. So what is entitlement? Entitlement, you should read section 16 which provides the condition read with rule 36 subject to 17 and 38. If availed in excess, again inspection can be conducted. Last one is a very dangerous thing. They say any other contravention of provision of the act or rules, inspection can be conducted. But again that should be if there is a suppression of a transaction with an intent to evade tax. Any other contravention also, so inspection can be conducted. Second category, inspection can be conducted on any person who is engaged in transportation of goods. Any owner of a warehouse or an operator of a warehouse. These people need not be the owner of the goods in relation to which that suppression has happened. They can be transporting your goods. Owner of a warehouse, operator of a warehouse, e-commerce operators get covered under this. If they are holding goods of a third party, inspection can be conducted on them for whatever the owner of the goods has done. When can inspection be conducted on them? If such person is keeping the goods in a manner that is likely to cause evasion. Under for the taxable person, it should be is already suppressed with an intent to evade tax. But here is keeping the goods or keeping accounts which is likely to cause evasion. So it's it's in the future tense, not in the past tense like in the first case. So these are the ingredients which has to be mandatorily present for the proper officer to initiate the process of inspection. So we previously saw that the inspection can be conducted on any place of business. What is place of business? Place of business has been defined under 285 of the Act in a very inclusive manner. It does not say only these three are place of business, it only gives an indication that it includes these three also. So a place from where the business is ordinarily carried on, including a warehouse or a godown or any other place where the goods are stored. Basically, in your GST revision certificate REG 06, whatever you list as your principal and additional place of businesses, inspection can be carried out in all such places. It also includes from where goods or services are supplied or stored or received, sorry. This can be the primary place where the activities are carried out. Then many instances what happens is there is a warehouse, there is a store, but books are kept separately. It can be kept in the registered office, corporate office, head office, branch office, administrative office, whatever name you call. Even though if it is not part of your RJ 06, it's still your place of business because you're keeping your books of accounts there. Then you have an agent who's carrying on business on your behalf. Then that person's place is also a place of business for you, for the department to carry out inspection on you. So that is also there. In the same breath, what is also important to note is that any other place of business, any other place, what they use here. So any other place, it is not defined in the Act, there is no guidelines in the Act, what can be or what cannot be any other place. So can the department officer or the revenue authorities take a view? I will go to your vendor's place, I will go to your customer's place, your job worker's place. There is nothing in the law which is stopping them, they can take this view also. But again, it should be their place of business only. Okay, this is basically about inspection. We move on to search. So we'll quickly try to cover the law provisions on this and then we'll have some discussion on what can be done in what scenario, like a case study kind of thing. So initially, lot of taxpayers approached the court challenging the powers of search and seizure provided under various laws. It's not only specific to tax laws or GST law. Almost all the laws where there is some kind of revenue involved, the authorities have been given the powers of search and seizure. So everyone went ahead and filed a writ petition with the High Court, Supreme Court stating this particular powers what you are given to the officers, it interferes with my right to privacy under Article 21. He is coming into my home, he is coming into my place of business. This is my private property, he cannot come. Article 21 is violated. They also said seizure interferes with my right to hold a property under Article 300. So all these matters went up to the Supreme Court under the income tax case of Puranmal. They beautifully said, a search and seizure is therefore only a temporary interference to a right to hold the property or premises. And statutory regulation in itself, statutory regulation in this behalf is necessary and reasonable restriction cannot be said to be unconstitutional. They said it can be unconstitutional only when rights are given. The officer has said you can do this, and if there is no safeguards to this right, if they have not also put a limit on when and how to exercise this right, then it can be called unconstitutional. That's why section 67 becomes very important, where we have to understand what are the rights of the officers, when they can exercise it, when they cannot exercise it, and when we can challenge it. Okay, with this let's see what the powers of search are. Search and seizure. Who can carry out a search? Again, the proper officer for search is the Joint Commissioner, officer of rank of the Joint Commissioner or above. And in this case, he may himself carry out the search, or he can authorize any officer on his behalf by giving an authorization in INS 01. When can search be conducted? So inspection we saw, what are the conditions to be satisfied for inspection. Under search, here also the proper officer has to first have reasons to believe, either pursuant to inspection or otherwise. So it can be done basis the information what they have gathered under inspection or otherwise also. That either the goods liable to confiscation, very important, or documents, books or things which are relevant for proceedings are secreted in any place. So whatever I highlighted there, those are the pre-requirements. Reasons to believe, when pursuant to inspection otherwise are secreted, and then it's all goods or liable to confiscation or documents, books or things. In any place, under inspection we read, it's only on the place of business they can conduct an inspection. Here they can go anywhere. They can go to the residence of the registered person also. They can go to any other place other than the registered place of the registered person also. The catchwords again, reasons to believe and secreted. We will analyze what is that in the coming slides. What can be searched or seized? So by making an order of seizure in form INS 02, the proper officer or the officer authorized by him may search and seize if he is of the opinion that the person to whom, search and seize goods liable to confiscation, documents, books, things relevant for proceedings. These are under section 67(2). Under subsection 11, they can also seize accounts, registers or documents of any other person. May not be of the person in whose name the authorization for search or inspection is given. During the search, if they find the documents of any other person also, but in that premises, accounts, registers or documents, if he is of the opinion that the person to whom which it belongs to is evading or has evaded tax, they can seize those documents also. But he has to record his reasons for writing and also give an acknowledgement for seizing the accounts, records and registers of other person. So, if you see, under both inspection as well as search, the authorization is given in form INS 01. So when an officer comes to your premises, he shows the authorization. I have been authorized by Joint Commissioner, here is my INS 01. How will you know whether it is come for inspection or search? If you see the format of INS 01 closely, there the authorizing officer has to select what is the reason to believe. All the conditions what we have listed here, it's all put like a box there. So they have to select what is the reason to believe, who they are searching or who they are inspecting, and the power is being exercised under which provision, 67(1) or 67(2). Okay, so that has to be ticked by them. Without that, the INS 01 only becomes defective and you can challenge the whole proceedings. There have been also practices, we have seen this, where the officer ends up in your premises, both the things are ticked. INS 1 for 67(1), INS 1 for 67(2). He'll say, I'll do inspection, follow it up by search. Can they do that? In my humble opinion, no. Because each of the option available has been differentiated by or. So either they can select this or this. It's not or and or. It's only or. But there is a different school of thought. Even the ICAI's handbook, it says, if the person giving the authorization, he has reasons to believe before giving the authorization that there is both secreting of goods liable to confiscation as well as suppression of facts, then he can give both the authorization at once for search and inspection. What is reason to believe? This is a precondition for both inspection and search. What is reason to believe? This is an expression and not a term, right? So there is no definition for this under the GST or any other law. You can go for tax laws, but the provisions of Indian Penal Code 1860 in section 26 defines this as a person is said to have reason to believe a thing if he has sufficient cause. So to believe something, you should have a cause. You cannot just imagine something and say, I believe this. Cause to believe that thing, but not otherwise. I am firmly believing this, but not anything else. That is my reason to believe. And this has been also adopted in the recently introduced Bharatiya Nyaya Samhita BNS 2023 in section 229. So the officer has to have some material on record to form such belief, and the record should reveal the reasons, because you can question the records, you can question the reason to believe itself. So very essentially the officer has to have some material with him. It cannot be a presumption or an imagination or even a suspect that there has been an evasion. He cannot simply sit and say, I have seen this file for the past 5 years, I am sure this person is making a evasion of tax or there is suppression, I'll go and conduct inspection or I'll authorize someone to conduct inspection. He cannot imagine. So what is reason, what is belief? Punjab and Haryana High Court in the case of HL Sibil versus Commissioner of Income Tax has beautifully explained that reason is information received when harnessed with support of an argument. So information, you have information and it has to be supported by an argument also. Information, evasion of tax, suppression of transaction. To argue that there has to be material in support of it. It assumes the shape of a reason. Allahabad High Court, in the case of Rich Udyog Network versus Chief Commissioner of Income Tax, belief means, belief is not doubt. It should be information in possession. It cannot be a gossip. It cannot be a hunch or a rumor. Okay? So there has to be reason, and to what the reason should be to believe that there is a evasion of tax. So the concept of reason to believe has majorly evolved basis jurisprudence only, without any support in the drafting of the law. The jurisprudence is available under income tax law, central excise, customs, sales tax, and recently under GST laws also. So we will see few case laws to understand what the courts have opined, what constitutes the reason to believe, and when they have struck down the entire such provisions when such conditions are not satisfied. Gaurav Sauram Traders versus State of UP. Here what has happened is, the Joint Commissioner, he gave an authorization to inspect or search. He gave the authorization on 31st of August 2022. Officers went, conducted the search, they have recorded the reasons. After the search is conducted, he is ticking the option for reasons to believe, which was found during the search. He didn't have any reason to believe before that. The reasons were caught during the search. So the taxpayer naturally went and filed a writ application under Article 226 with the High Court, stating this whole proceedings are invalid. Allahabad High Court rightly came to the rescue of the taxpayer, stating reason to believe should precede the sanction of authorization. It's a necessary precondition. It cannot be a post-mortem. After the search is conducted, you cannot record the reasons to believe. The search, seizure, illegal. Interesting case under Income Tax Act. Next one. Lakmani Meval Das. The officer issued a notice for reassessment under section 147 of the Income Tax Act. He recorded the reasons as one of the, so this person Lakmani Meval Das, he had claimed deduction for interest paid to lenders or loan people from whom you have taken loan. Officer, after 2-3 years, he found out that one of the person is a namesake lender who does not do this business at all. So his whole expense claim is fictitious. He came back and he said, I am reopening your assessment because one of your lender is fictitious. I have to disallowance the expenditure added to your income. The assessee went to the High Court, challenging the reopening of assessment on the grounds that the officer is only giving this one reason, that one of my vendor has given a statement. There has been no proof to substantiate that this particular statement is in relation to loan given to me. He is just a person who says I am fictitious vendor, that's all. But he is nowhere told that I am fictitious because of the loan given to this person, or it has nowhere come into any this thing that the loan given is in relation to the assessment year for which the deduction has been claimed. So without this concrete evidences, it is only a subjective satisfaction. So the court held it should also have a rational connection with the and relevant bearing to this formation of belief. It cannot be a mere reason. And very recently, coming to under the GST regime, RJ Trading Company versus Commissioner of CGST. So here, this particular partnership firm, RJ Trading Company, they were dealers of cigarettes, traders of cigarettes of ITC Limited. They were purchasing goods from one person who was in a different jurisdiction, and the Joint Commissioner of that jurisdiction issued a letter to Additional Commissioner of RJ Trading jurisdiction stating, I am doing search of one person. This person has purchased goods from your person. I believe he is committing some kind of evasion. You check whether this person from whom the goods are purchased is simply existing or not. He only asked to confirm the existence, but this particular RJ Trading Company's Joint Commissioner, he went ahead, conducted the search, seized goods worth tens of crores of rupees, and this entire proceedings was challenged before the High Court, Delhi High Court. So the Delhi High Court told you should have a concrete reason to say this person has conducted, the condition is satisfied. Just because of a suspicion that his customers committed a fraud or whatever, evasion of tax or suppress the transaction, you cannot come and carry out a search on this person. And hence the search was held to be invalid. The department filed a special leave petition before the Supreme Court challenging the decision of High Court, And High Court also dismissed that. So it basically came in favor of the taxpayer, stating that this search is illegal because there was only a hunch, there was no reason. Can an authorization for search seizure be issued by the proper officer by borrowing conclusions of another agency? We have seen this under the GST regime also, service tax regime also. Income tax, your income is so much, service tax, your income is so less, there has to be some suppression, notice issue, search conducted. In this case of Andalip Segal, the officer received some information that this person has paid bribe to Iraqi officials, okay, under income tax, and hence he just and this information came from Enforcement Directorate. So this person, bribe is not a allowable deduction under income tax, so he wanted to reopen the assessment to disallow the bribe only basis of the Enforcement Directorate report. So court held that you cannot conduct search, seizure or reopen assessment basis a report of another agency. You have to conduct an independent inquiry and examination of materials. And this again went to the, after Delhi High Court confirmed it, department went to the Supreme Court. Supreme Court also confirmed this in the favor of assessee. So these pointers can be kept in mind when you have to question the proceedings initiated itself, inspection or search, against the taxpayers by the department. The next question for search is secreted in any place. What is meant by secreted? Again, this is an expression and not a word, no definition under the GST law. So can we say, he came to my premises, he found everything lying around here and there, he will go ahead and seize it. Is it valid? No, because secreted means there should be a positive act from the person to hide it, conceal it. Just because I am keeping it somewhere, which he sees, if I am secreting or hiding it, he will not find it in the first place. I should have put it somewhere. And the invoking of powers under section 67 fail if the goods, documents, books or things are not secreted at all. Example, I will take an example of your computer folders, which are the primary things which the officer comes when he targets. He comes, he takes the access of your computers, he says, he just goes through the folders. You would have named something as your personal files, whatever it may be, but when he goes ahead and sees, it is actually not personal files, but the documents relating to sales you have made, undocumented sales. Okay, this is secreting. So then he can seize those documents only when that is secreted. Whatever he finds he cannot seize, telling this is secreted. Non-accounting of goods, again, secreted. But it's a very subjective test. This happens in a lot in the retail industry when they go on adding places of business but miss adding it in the registration certificate. When you're carrying out business at a new location, without adding it in your registration certificate, you have goods there, business is going on there. Can we call it has been secreted? In my view, no. As there is nothing I have hidden, I have just not intimated to the department that this is my place of business. Everything is happening in the plain sight. I have not taken any positive action to hide it or conceal it. But here, the Rajiv Traders was a state of UP, Allahabad High Court decision. That secreted place, it was held, it includes both disclosed as well as undisclosed place of businesses. So we'll have to be very careful. It's a very subjective test. All this is, we cannot say in a black and white answer, yes or no. It's very subjective. Goods liable to confiscation. During such proceedings, can any goods be seized by the officer? No. Goods liable to confiscation is what they can seize. No definition for what is goods liable to confiscation. We have a definition for goods, which we discussed in the morning also, to say every kind of movable property other than money and securities, but includes actionable gain, growing crops and so on. While every kind of movable property is included under goods, for the purpose of section 67(2), search and seizure, the powers given to officers for seizing is only in relation to goods liable to confiscation. What are those? 130 subsection 1 says. Non-accountable of goods which are liable to tax, these are goods liable to confiscation because this amounts to secreting it. Supplying taxable goods without taking registration. You cross the threshold of 20 or 40 lakhs, you are liable to register, you are not obtained registration, you are still supplying goods, they can seize these goods. Contravention of any provisions with an intent to evade tax, very wide powers again. And use of conveyance in contravention of provisions with an intent to evade tax. So these are the 4 situations where the goods shall be liable for confiscation. It also covers within its scope things. Just come to that. Documents, books or things. If you see the second bullet, second sub-bullet and the second bullet, it says documents, books or things. Things is very wide in scope to include any material or object. So goods liable to confiscation can be seized, but for the other things it's not liable to confiscation. Any document, books or things can be seized as long as it is relevant for your proceedings. So when you read it together, interpret it very liberally, they can come in and seize anything apart from your goods which are only liable to confiscation. So documents has been expressly defined under 241 to say it includes written as well as printed and any electronic records also. Books is not defined, but books we can understand, it's under section 35(6) which lists the books of accounts. All those books of accounts and registers can be searched and seized. So in all this, things which very frequently asked question, do things include money, currency and cash? If they find it in your premises, can they seize that under section 67(2)? We will discuss that in the coming slides. So seizure. Officer comes, he searches. There was reason to believe that you have secreted some goods, but he didn't find anything. End of proceedings, all good, all well. But he finds some goods, documents, things or books which are secreted. What he can do at that point in time? He can seize it. All secreted goods, articles, as discussed, what we discussed before, are liable to seizure. Seizure can be done, again, it can be done only in the cases of search. It cannot be done in the case of inspection because the power to seize is coupled with search under section 67(2). It is not given under 67(1). So if it comes with the authorization INS 01 with search ticked upon, only then you can allow him to seize the goods. If not, no. So what happens? Officer comes to your premises. You are in the sense the client, the taxpayer's premises, but the taxpayer is not allowing him to enter into the premises. He is denying access to him. 67(4) provides the powers to the officers to seal or break open any almirah, electronic devices, box or receptacle in which any goods, accounts or registers or documents of the person are suspected to be concealed. So he can break open this by external force, or he can put a seal on it, telling not to access it. What if these are electronic records? Documents, books or things can be electronic or otherwise also. He cannot break it open because it's not physical, it's all electronic. The instruction number 1 of 2021 issued in this regard, they say they can also involve suitable electronic experts in the search party for breaking open your passwords or electronic safety protocols. That is also given to them. And when they seize the goods, does it cease to be your goods? No, seizure is only taking possession of the goods. The ownership still lies with you. It is not confiscation. Confiscation, transfer of ownership from taxpayer to government. But in seizure, it's only they are taking the physical possession of the goods. For confiscation, again, they have to go under section 135 under which the 130 subsection 5, under which the scenarios under which confiscation can be done is given. So after all this, the procedural aspect is when the officer is seizing something, he has to give an order of seizure in INS 02. There he has to mention the description of goods he is seizing, the quantity of the goods, and then other specifications, what should be there. And every search, whatever happens to you, it has to be in the presence of two independent witnesses. It cannot be person from the search party, it cannot be persons from your own office. Two independent witnesses who are respectable members. So the instruction says it has to be an employee of your public sector undertaking or a bank. So two members from them, they have to come, they have to be there for the whole search proceedings, they have to certify that it has been carried out in a fair manner and sign as a witness. Okay, and then lastly, they come to your premises, they carry out the search, they find articles or goods which are liable to confiscation, but it is voluminous. Okay, it is hazardous, or it is embedded to earth in case of machineries. What can they do at that point in time? So in that point in time, they can issue an INS 03 prohibiting you to use it. They can keep it there, but they will put a prohibition, like how you see a seal will be put around it stating you cannot use it. So that can also be done by the officers. We have discussed inspection, we have discussed search, seizure, detention. So what happens after the goods are seized? So I'll take a small pause here. If anyone has anything, they can wash it out now, or we can keep it for the last. It's up to you. However we want, we can proceed.
Nithin, this INS 02, order of 02.
Order of seizure.
Seizure to be signed by two witnesses,
Yeah.
respectable, all that. So how far it is practicable? Like,
No, it is mandatory because it is prescribed under the Code of Criminal Procedure also. 165, 93 and 100 of CRPC. It is mandatory to be followed in such as we'll see that in the next slides.
two witnesses is okay, but respectable, all that, like public sector.
It's very subjective again. We can only question it at the stage of when you're challenging it. At the time when they come to your premises, you cannot do anything about it.
You have right to cross-examine them.
That is later. When they issue a show cause adjudication proceedings, you can cross-examine them.
You have
Yeah.
the power to cross-examine.
No, my question was with respect to the witnesses which says respectable people.
That is the words they use in the instruction. But how far, again, subjective, like I told you. So next, what happens to your goods, documents, things or articles after it is seized? What are the timelines which are prescribed under the law? Surprisingly, the second proviso to 67(2) says that documents, books or things can be retained for as long as it is necessary for any proceedings. There is no time limit for this. Okay, the only time limit can go upon your section 73 and 74. That is the only thing which is prohibiting them, because they have to return it after issuance of show cause notice, so they can keep it till then. But they also provide a relaxation stating that under section 67(5) that from whomever you seize the documents, books or things, you are entitled to get a copy of it. This is not an absolute right, but a conditional right. You can make a copy of it, subject to the officer is of the opinion that this is not going to prejudicially affect the whatever proceedings he wants to initiate. It has to be at the date and time and place where he provides it. So if he refuses, the officer can refuse it stating this will prejudicially affect my investigation, I am not giving you the permission to take the copies of it. What is the relief here? Approach court. Courts have in few cases come to the rescue of the taxpayer stating you have to give the copies to the taxpayers. But even if court does not give you the relief, what can be done? Wait for show cause notice when they have to mandatorily give you all the documents as read upon documents. But for goods, it has to be mandatorily released within 6 months from seizure if no notice is issued. Notice is issued means 30 days. Within 30 days of issue of notice, you have to give it. if no notice is issued within 6 months, but can be extended for another 6 months. So maximum is 1 year. One more safeguard what the law has implemented is, the taxpayer is also entitled to get the provisional release of the goods, whatever is seized. But here he has to furnish a security in the form of bank guarantee, which is equal to the value of goods, interest, tax and penalty, plus a bond in form INS 04. Okay, provisional release is only for goods. Provisional release is not for your documents, books or things. So once it's gone, it's with them till the proceedings are initiated or completed.
And we can't question that also, like in the appeal or anything.
Which one?
That can't be questioned also. That documents which are gone till the proceeding is done, they'll not give back. So that can be challenged in the form.
No, there is no remedy for that. You covered this in your presentation under section 121B. It says the order of seizure or detention is non-appealable. So there is no remedy available at all. Only way is you can challenge the proceedings itself, stating this officer has come and initiated search and inspection against me without any reason to believe, and then all the documents will come before the court to analyze that. So retention and return. There is one more thing, dispose it of. The powers are given to disposal of the seized goods also. If the goods are perishable, hazardous in nature, or there is also a discretion given to the department stating if storing of these goods is very costly to the department, it's very expensive, or we don't have much place for storing the seized goods, they can dispose it off. This is as per the disposal manual issued by CBSE in 2019. So under this, notification number 27 of 18 has listed the goods which can be disposed of immediately upon seizure. It's all your general goods which have less shelf life, salt, then there is petroleum products, then goods which have very less life because of technological advancements. So these goods also have to be disposed of immediately upon seizure. But here an option is provided to the taxpayer under section 67(9) to get this back. If you pay the market value, lower of market value of the goods, or pay the tax, interest and penalty, whatever is suppressed, you will be eligible to get the goods back. One interesting point is section 67(8) says goods, and 67(9) also talks about only goods. But the rule which provides the procedure in relation to this states that officers can also dispose of things. When they seize both things and goods, they can even dispose of things. What are things? What can dispose under which scenario? There is no power under the law, but the rule talks about this. Yeah, applicability of CRPC. So almost like I said previously, almost all the revenue laws have this inbuilt power of search as well as seizure to protect the interests of revenue. Instead of doing it after the evasion has happened in the form of assessment, audit, they want to safeguard the interests of revenue before something has happened or immediately after something has happened. So everything has a search and seizure provisions. So here under section 67(10) they say all the applicable provisions of Code of Criminal Procedure 1973, CRPC as we briefly call it, is applicable to search and seizure provisions under 67 also. Okay, the only change is 165(5) says CRPC that magistrate is the one who can exercise the powers of whatever relief to be provided or authenticating the documents, but here it's all commissioner as far as GST law is concerned. Few other interesting things are, an officer who's conducting a search comes to your place, you are obliged as per CRPC Act to allow him inside, cooperate with him, extend all reasonable facilities for him to conduct the search. Second bullet. The third bullet is what we have already discussed. 2 respectable witnesses from the locality must be present to ensure fair search. They should be independent and non-biased. They should not have any whatever interest in what the outcome of this search would be, whether there will be recovery, not. There should not be any relation to that. Then bullet number 4, officer must prepare list of all things seized during the search and places where they are found, and this should be signed by the witness. This comes in INS 02, expressly prescribed. Copies of authorizations granted in the said proceedings to be furnished to the taxpayer. This is not followed. I'll come to this later. Can you ask for the copy of INS 01 for your records? That we will discuss later. Then it says RUD should be, which forms the basis of show cause notice, should be furnished to a taxpayer. Last subsection before we move on to the case laws, here, sorry, case studies, yeah, so please.
I like to add a thing. In the BNSS, the new
yeah, Samvidhan
in that they mandate the video recording also.
I'm coming to that later. It's in my case studies, whether they can ask, because they generally come and say switch off all the CCTVs, cameras, so that also I am covering there. So the last subsection under section 67 provides that the commissioner himself or through his subordinates by authorizing them can conduct a test purchase of the goods. Why do they want to do this test purchase? To check if the person is issuing a tax invoice or not. So this the practice is to generally carry out this to see whether there is any suppression of facts or before commencement of any investigation in this matter. So the provision says may cause, you see the first sub-bullet, may cause purchase of goods. So this is also interpreted by the revenue authorities that they need not monetarily do it themselves. They can ask someone to do this on their behalf. They can say, Mr. X, you please go purchase these goods, come and give the invoice and goods to me. So any person can be appointed indirectly also. After the test is done.
So interestingly to add this, there was an ad by the state government of Karnataka wherein the state GST authorities, they used to go to different places and ask for invoices, and like there used to be an ad, okay, taxpayer be aware when you do.
Correct.
It was, I think, part of this.
Right. And this on this provision only. So after the test is done, they are satisfied. Whatever they want to find out, it's found. Person is issuing invoice, not issuing invoice. After that, they will return the goods. The taxable person is mandated to refund the amount whatever was paid and cancel this invoice. There is one anomaly here. When they are talking about making a test purchase, it can be done either of goods or services. Okay, but when they are talking about returning, it's only on goods. Services can't be returned because maybe it's consumed. But what is not covered here is, in case of making advance payments, like you want to check if this particular hotel or restaurant is issuing invoice or not, so make an advance reservation, pay some amount, they collect GST, issue an invoice. When you cancel it, whether they are obliged to refund it, because section 67(2) nowhere says that you have to return the amount received for services also. And while 67(1) and 67(2) says INS 01 is the form of authorization for conducting inspection or search, for test purchase there is no form prescribed on when or what the officer has to, the commissioner has to provide the authorization. So we have briefly tried to summarize the difference between inspection and search. Under inspection, please read the inspection as put it as investigation. Inspection is only for the purpose of verification of transactions of supplies, stock in hand, claim of ITC and contravention of provisions of Act. While under search it's for finding goods liable to confiscation or secreted books, documents or things. The scope of inspection, it can be done only at a place of business, but search is anywhere. Power, seizure of goods and documents we have discussed recently only. Power says there cannot be any forceful action, breaking of your almirah, sealing your premises. Inspection they cannot do it. Search they can do it. Goods, documents, things cannot be seized under inspection. under search, they can do it. So these are some of the frequently come across scenarios which I have tried to put it here for our discussion today, which are both expressly provided in some cases in the instructions which have come out, and in some case through decisions. Can the registered person seek a copy of Form GST INS 01, which is the form of authorization where the reasons are listed and whether it is a search or inspection clearly provided. The provisions do not explicitly allow or disallow the same, but as per the procedure, whenever the Joint Commissioner who is giving the authorization, he has to build a file which can be subject matter of scrutiny in the further proceedings. So as per the procedure, the authorization form has to be returned by the proper officer to the Joint Commissioner. He will put it as part of the file. But in my humble view, the taxpayer can certainly ask for a copy of INS 01 once the officers have returned from the premises. But Andhra Pradesh GST has gone ahead, GST department, state department has gone ahead a step further and said, they explicitly given this under the SOP, that the person who is being inspected or searched should not be given the INS 01 at any cost. Only in case of seizure, INS 02 can be given is what they have said. I don't know under what authority they are telling this, but this is what the SOP of Andhra Pradesh GST says.
Excuse me?
Yeah.
You said that, right? So what you said is right. The exact provision for asking that is, we have a that INS 1 reason to believe we can ask rightfully via making a petition to Commissioner.
Correct.
He is considered as a magistrate by section 67 subsection 10. Read with that old
Under CRPC, that's what? Under
CRPC 165 subsection 5.
Correct. 6710 here says,
we need to make an explicit petition for that.
that's what? If you see the last but one bullet, copies of authorization granted in the said proceedings to be furnished to the taxpayer, CRPC is clearly saying that.
Not only the INS one, you can also ask for reason to believe.
Correct. You can question it, that's required for your proceedings, they have to give it to you.
Exactly.
But that's what I'm saying, the officers are deviating from this practice, they are telling you should not give this. So, if you see, go and search for case laws under section 67, you will come across many case laws where the officers have come, they have sealed the premises, and in some cases they have stayed at the premises for weeks together under the pretense of search. Okay. So here the second question is, can premises be sealed during inspection or through during search? If yes, if it can be sealed, can it be sealed for an indefinite period or is there any timeline for it? So the powers of this nature are allowed only under section 67(4), where they say if only the person who is being searched is offering resistance or denying access to the premises, they can go ahead and seal it. But this is only under 67(2). 67(1) they can't do anything. So in inspection they cannot do any sealing of premises. Can it be sealed indefinitely without any reason? They come, they put a seal on your premises stating this is under the proceedings of search, you cannot use it. The Delhi High Court in the case of Napkin Impex Private Limited held that the premises cannot be sealed indefinitely, even went ahead one step and said, in its opinion, sealing of premises itself is illegal. It said the officers can be restrained whenever they come to your premises, you can restrain the officers to safeguard the evidences lying around, whatever is there, your books, so that they need not harm you in a very negative way tomorrow. They are eligible and are permitted to safeguard the evidences. So that does not mean he is denying access and you cannot seal it indefinitely. Third one is again very grey area. Both the scenarios are possible. Whether money, cash and personal jewellery found during the search be seized. So money will fall under documents, books or things, or goods. Goods, 252 we read, it explicitly excludes money in its definition, so not included. Documents again, not included because it says it's printed or sealed in electronic form. Books as per section 35. So the last, yeah.
Actually, recently the Supreme Court has upheld the decision of Delhi High Court in Deepak Dhariwal case. The cash cannot be seized.
Yeah, I'm coming to that. There are many case laws which I wanted to cover, but rightly you have said it. The general and proper.
Supreme Court has settled the matter.
But still, the authorities are not following it. It was already there. High Court was there.
Yeah, but High Court was there, but there is a divergent view.
Correct.
One High Court said they can,
Yes.
by stating that cash is a thing, they can seize.
Correct. Madhya Pradesh High Court said that in Kanishka Matta.
Delhi High Court said no. Cash
Delhi High Court and Kerala High Court both said you cannot seize it.
Subsequently, the matter was challenged by the revenue in SLP in Supreme Court. Recently, only the judgment came.
Yeah, correct. They've already covered it, but still the general and popular understanding among the department authorities whenever they come for a search or a seizure is any cash lying is illegal. They take this approach from your narcotics or PMLA laws, where there is an inbuilt presumption in the provision that if I am searching the premises of a person, whatever is found in this premises belongs to that person. But here, under GST 144 gives this presumption only for documents, not for cash. So they cannot do it. Like what we have just discussed, Madhya Pradesh High Court in Kanishka Matta's case said that things include cash can be seized. But Gujarat High Court in the case of Praveen Kumar and Co. said cash can not be seized because it is not part of your stock in trade. Stock in trade can be seized. If it is not towards unexplained transactions, so it cannot be seized. Delhi High Court further went and put a very interesting interpretation here to say when you are reading documents, books or things, you should follow the principles of ejusdem generis. You should interpret things as a continuation of documents and books. Therefore, things should include only items like your pen drive, computers or hard disk, which either does not fall under documents or books, which provide some information which is useful to your proceedings. Okay, money does not as such give any information to your proceedings, so it cannot be seized. So, different views in high courts. But as you said, the Supreme Court has decided this matter. Anyway, always contest if they come and propose or even seize your cash. Next is whether chartered accountants or advocate. Yeah.
I like to add a point. But if the office is brilliant, he can do one thing. He may hand over the cash and jewelries to the income tax department.
Yeah, they can do that.
Then they can.
But you cannot straight away go and hand it over. There should also be a proceedings initiated.
That's not necessary. They can hand over it and they will initiate proceedings under section 132 of Income Tax Act.
Correct. So whether a chartered accountant or an advocate is allowed to be present during the search operations. There is no SOP stating yes or no. The law also does not say yes or no. But the Supreme Court has provided this, its opinion in the case of Central Excise. Poolpandi versus Supreme Central Excise, it said a person being searched is not a criminal or an accused in any criminal case, and hence he does not carry any statutory right to seek presence of an advocate. But what I feel is an advocate or chartered accountant can still be present in the premises only for the purposes of giving documents or information. He cannot prompt them. He cannot go and listen to what is happening there. Yeah, the next question is what you asked, whether officers can ask to disconnect or switch off CCTV cameras installed in the premises being searched. So BNSS also gives this, and there is also an instruction, 1 of 2020, which explicitly provides that in sensitive cases, whatever recordings are there, everything will form part of your evidence. So whenever the officer comes and asks you to switch off, you can refer them to this instruction saying CBSE has clearly mandated that this has to be part of your search operation, and hence we are not going to switch it off. Whether the taxable person can be mandated to sign a statement or a panchnama. Panchnama or a statement is at the end of the search operations. They issue the INS 02 and also to prepare a proceedings of what was searched, who was there, what is the procedure carried out and everything. And an acknowledgement of that also, they should also share a copy with the taxpayer and obtain his acknowledgement that this is what has happened. But if a taxpayer refuses to do it, Can he do that? He can do that, but what the officers will do at that point in time is they will go on a conspicuous place of your business premises, they will paste it, take a photo, keep it as evidence. But advisable to always look at the contents, agree, sign to it. Next is, can arrest be made during search? Arrest under section 69. Can they arrest a person during search proceedings itself? So power of arrest comes under 69, not under section 67. But if the commissioner has reasons to believe that that person has committed any of the offences under 67, like supply of goods or services without raising an invoice, or raising an invoice without supplying goods or services, or if he is availed ITC on the basis of invoices which were issued without raising goods, without supplying goods or services, if that value exceeds 5 crores, they can straight away arrest him. So, if sufficient...
Is 5 crore where it is indicated?
69, sir. 5 crores. They can immediately arrest him. So, if out of the search and inspection proceedings, enough information is gathered, the officers who are doing it can immediately go take the permission of the commissioner and arrest the person also. And it need not be, because there are many cases which have come up where the taxpayers are arguing that no arrest can be made until the search proceedings or whatever proceedings are initiated have come to a conclusion. So it has been held that need not be completed adjudicated assessment proceedings if there is sufficient proof gathered that this person is doing the scenarios under section 69 which is more than 5 crores, they can arrest him. Yeah, whether recovery of tax can be done during search proceedings. Lots of cases were there where they were held that under duress, under coercion, people were being asked to make payments, midnight, 12 o'clock, 1 o'clock, whatever it is. If you want to go home, make payment of it using DRC 03. People used to make the payment, immediately approach high courts, get the relief. Now, CBIC has come up with a circular itself, instruction itself, where they have clearly told no recovery can be made during search proceedings. Any recovery you want to make is only on the basis of an order. But that does not stop the taxpayer from making any voluntary payments.
So he asked us to pay voluntarily.
Well, how do you prove it voluntary? If you again go back and say this was under coercion and duress, courts will again come to your rescue. Okay. So the last 3 questions. If during the search proceedings, I have seen this literally happening to one of my clients. What they were doing is they were recording the transactions in their notepad. Okay, again this was happening in the notepad plus in their software also, whatever ERP they were maintaining. There is a small discrepancy here. There was a difference between the notepad versus tally. So they recovered this notepad stating this amount is X amount as per this notepad, but in tally it's X minus amount. So can it be treated as an evidence for initiating any proceedings against you? Section 144, like as we discussed, provides a presumption that any documents found in your premises belongs to you. Okay, so they can still use it as an evidence, but only when in the case of prosecution, but not otherwise. It can be, the information gathered can be used only in the case of prosecution, or they can still use it for other proceedings. Statement recorded during search, will it have any evidentiary value? Whatever you say during search, evidentiary value. Section 67 does not give any power to the officers to administer an oath and take a statement. Income tax has this, where they can take statements and treat it as evidence. But here they can only do this under section 69. When they summon a person for producing evidence or documents. Section 67 says whatever you say cannot be treated as an evidence. Oh, okay. So a search is conducted. You question the search. You challenge it before the High Court. High Court rules it to be illegal. What happens to the evidences collected during that search? Can it be used against you? Yes. the evidence collected during an invalid search can also be used against you for any other proceedings they want to initiate. They can take it to 73, issue a show cause notice, refer it to audit under 65, they can still do it. There is a doctrine under the US law which says the fruit of a poisonous tree cannot be used. That means anything illegal done, even by the government, whatever comes out of it is not good. That doctrine is not applicable in India. Various case laws have come. Supreme Court has held that even if proceedings are invalid, that the evidence collected still holds good. So what we have done after this is try to summarize the rights and duties of a taxpayer during inspection and search, starting from the moment the officer enters and wait until what happens until reply to show cause notice. Briefly, just taking you through it. When the officer arrives for inspection or search, ask for INS 01. And if he allows you, take a copy of INS 01 also. Then instruction clearly says you are authorized to ask for his identification, and you can also personally search him, whatever he is carrying. Whether you can, like what they do in airports, they frisk you, you can do that also. It's always advisable to not provide any resistance at the time of search or inspection. Cooperate during the search, permit officers to carry out whatever they want to do not harm them in any way. So when they seize any articles, ask for INS 02, confirm it's correct, it's complete, correlate with whatever they're taking or seizing, and also ensure that the independent witnesses who have come up with them are signing it. Do not make any spot payment. Advisable to do it. Do not make any advisable to follow this. Do not make any spot payment of liability discovered. Without summons under section 70, do not give any statements or in writing. But it's all easy to say but difficult to follow, I know. They will force you to give a statement, they will force you to admit something, sign it. In that scenarios, what you can max do it, follow whatever they are saying, let them be done with it, retract your statement immediately if you do not agree with it.
Meaning we have to file a letter or
yes.
communication saying you have done this, you are not okay with it.
Yes, it was. You can say it was done for whatever reason, blackmail, duress, coercion, and immediately retract it, and it's admissible. The court will disregard this completely if it comes against you. Then make written request for provisional release of goods. It's your right given under the provision. You can always ask them to provisionally release your goods by following the procedure. Follow it up with a written response. If he is telling yes or no, receive that response also in writing, document it. After this all is done, await for DRC 01, show cause notice, then reply to SCN before adjudicating authority and ensure it's an independent authority. Not the same person who's come and conducted your search, but the other person is issuing this show cause notice. So in summary, what is all we have discussed, I've just tried to summarize it in last two slides here. Joint Commissioner or higher ranked officer, JC, in this case ADC, with reasons to believe, authorizes GST officer, any officer, in Form GST INS 01 to inspect place of business. In that, the place and date has to be clearly specified. You cannot simply say conduct inspection or search on all premises of this taxpayer. You should say this door number, road, area, pin code. Authorized GST officer inspects place of business for suppressed supply or stocks or ITC availed in excess of entitlement, contravention of provisions to evade tax. Then authorized GST officer inspects place of business of other persons, that is the others, transporter, warehouse operator, warehouse owner, where they are of the belief that this is likely to cause evasion. Then after all this, the Joint Commissioner, if he is convinced that this is a fit case for search where they can seize the goods or documents, he will upgrade this particular inspection to search. Like what I told, it cannot be, in my view, it cannot be a single authorization. They have to go back, explain this to the JC, take a fresh authorization for search. Then they will cease offending goods of articles which are secreted by issuing order in Form INS 02. Or when it is not practicable to seize the goods, take with them physically, they will issue an order of prohibition in INS 03. It can also be issued to third parties, your job workers, your customers, where you are selling it on sale on return. They can issue a INS 03 to that person also to not forego custody and retain the goods. If you apply for provisional release, furnish a bond along with the bank guarantee, and then they can release it. Special articles are liable to dispose of immediately after seizure, which are prescribed under notification 27 of 18. One more thing what they say here is, if you apply for provisional release, the officer permits provisional release, but you don't take the custody within 1 month, it need not be these specified articles. But where the permission is given for taking the goods and you're not taking it, then also they can dispose it off. Last step is release of seized documents or things within the timelines what we have discussed. 30 days if issuance of show cause notice for documents or goods, 6 months for goods, which can be extended up to 1 year. So this is all I wanted to cover. If there is something anyone wants to add to it, we can do it, or any doubts we can discuss.
So in one of my clients' case, they came for the seizure or inspection, and they made the arbitration, some sort of calculation, and you have suppressed the stock, so 3.5 crores or 4 crores, which was not, it was not likely. He was a law-abiding person for the last 25 years. I explained, over the phone I told them, you explain everything like that, you record it, and they made some calculation which was totally wrong. So we made the revised calculation. They want the 6 years record to be explained within 2 days or 3 days. They made after a couple of days, maybe that they understood they are unnecessarily they landed, or we don't know. But having he explained, and we are ready with the explanation about for what they have not, they mentioned it, they have not retained any stock, any of the seizure was not done, they have made mention in that letter. Now we are ready with the reply, but they say wait, more than now 6 months. They are not taking any reply from us, and suggested my client you post it. They are also...
Did you receive a notice, sir?
Yeah, they received the notice.
Under 67, 73.
At the time of inspection, they gave these are the findings.
That is not required. You need not answer to it, sir.
So we need not answer at all?
Not required, sir, because it is not does not carry any powers in the law. It's just a document what they have given. You need not answer to it. You are not bound to answer it, and they cannot hold it against you tomorrow also.
Unless the show cause notice comes within 7 days. Now what is it you said? Time limit?
There is no time limit for show cause notice. Under 73 show cause notice timeline applies for this also, for whichever period they have conducted or unearthed the suppression or this thing, for whichever period it relates to, the same 74, not 73. One more 74, so whenever there is 67 inspection or search, they cannot issue a notice under 73. It has to always be under 74. Because it's all suppression, misrepresentation, it contradicts themselves. If they initiate a procedure under 67, then go and issue a notice under 73, which they have done in case of my client, then they are contradicting themselves.
Yeah, another small client, they made these assets, as you mentioned, they took the vehicle and took it to the Green store, and it was only 50,000. So the dispatch inspection was, the document was made on Saturday. Because of rain, they dispatched it delivered it on Tuesday. You delivered after 48 hours, something like that.
Oh, 68, one under that 130 rule.
They put 100% penalty, 54,000, and he's a poor fellow, and the vehicle was detained for 4 days, so he has to pay that. But there should be some board circular or something to see that there such a silly way of approach by the department, whether it's been stopped as on, right?
No, still going on. So these cases are still going on. What people generally do is they approach the High Court directly when they are seizing or they are doing these kind of things, which are like what you said. It's only with what you should have a valid reason why there was a mistake, why there was a delay, and if the High Court finds that these reasons are acceptable and this is not to cause with an intentional to cause harm to the revenue or cause loss to the revenue, High Courts have allowed it also. They have set aside the.
It was a genuine cause, and I was also. It was a Saturday, heavy rain. The vehicle could not move, and the driver doesn't know about this law.
Yes,
so
correct.
he, on Tuesday, Monday evening or late Tuesday, he delivered.
They should have generally cancelled this e-way bill, generated a fresh e-way bill whenever they were transporting the goods. But again, it's a procedural lapse. Recourse can be found with the High Court if you have justified reasons for this. But for 50,000, like what you said, it's not High Court. Yeah.
Cost of reaching High Court is more than
that.
And probably like with the amount is involved is more people.
Correct. That's what they generally do. Yeah.
Hi. It's a harassment, if any, by officer. Can it be recorded in the social media area, in the mobile or anything? Whether it is accepted in the future? As in, suppose any officer, as per the law and everything, but as a force by any external party, they are doing something. Can it be recorded in the future?
Definitely, if you have CCTV or it's working.
Yes, that's it.
Yeah. When you have a CCTV or a camera here in your premises, definitely everything can be recorded. And to show the safeguards in relation to searches, like what I said earlier, what was prescribed in Puranmal decision by the Supreme Court, all these powers are subject to having safeguards only. So if the officer is not followed the procedure laid down and is done it in a very arbitrary manner, which intrudes the rights of the taxpayer, whoever is being searched, definitely you can challenge it and the search will be called of illegal.
But with respect to that social media thing, I think recently there was some CA put it in, then I think they issued some notice we were causing our damage or respect or something.
That happened somewhere in north, if I remember right.
Yeah, some like civil procedure or something they issued.
Correct.
Anything else? That's it. So we'll wind up. Thanks for your time, everyone. Thank you.
Thank you.